This was followed by the presentation by the Executive Commissioner Legal and Enforcement, wherein she emphasized the need for the market to embrace compliance as a culture. She provided insights into how Nigeria got into the gray list in the first place and the efforts that was put in to ensure that we got out. And noted that the emphasis of the summit, among other things, was to ensure that Nigeria never ever again finds itself in the gray list. She therefore charged compliance officers and the CEOs who were in the meeting to continue to make themselves abreast of updates and changes to regulations as they happen, especially as relates to the newer areas such as digital assets. This was followed by the first presentation for the day. The presentation was made by directors and heads of departments at the Securities and Exchange Commission. And the emphasis of their presentation was essentially to review the recently passed Investment and Securities Act 2025 and highlight those critical areas that was going to affect and impact the functioning of the Nigerian capital markets going forward. So some of the key things emphasized in their presentation were the fact that the ISA 2025 has given the Commission, has separated the functions, powers, and the roles of the SEC, unlike what used to be obtainable in the previous ISA 2007. The new ISA also provided clear definitions and regulatory oversight over virtual assets and virtual asset providers, with SEC now explicitly empowered to regulate all digital asset exchanges and to also ensure investor protection in that emerging sector. The third thing they emphasized was the strengthened legal framework over the derivatives market. Including commodities exchanges and the regulation of warehouse receipts, which enhances the overall operations and stability, especially as it relates cross-border cooperation in that area. Now, securities offering and fund management was expanded and broadens the permissible investment assets for collective investment schemes, just to highlight some of them. One key thing they also emphasized was changes in the penalty and sanctions regime of the Commission. And regulated entities are encouraged to make sure that we take compliance very seriously, because the new penalty regime is stiffer, essentially geared towards dissuading capital market operators from infractions. So we now have very stringent penalties and provisions around Ponzi and pyramid schemes, which includes not just penalties and can extend also to imprisonment. So these are some of the key areas that the summit was able to cover yesterday. We had other panel discussions where we had our colleagues from sister regulatory agencies, the NFIU and EFCC also join us to highlight issues around the gray list and the overall expectations of the market and market participants going forward. Hopefully we'll build on those issues today in the conversations that we would have. Thank you.
Thank you, Mr. Emeka, for Nana for that summary for yesterday. Now we are set to take our first presentation for the day, which is on emerging trends in compliance landscape, in the compliance landscape in Nigeria. And can you introduce the presenter to the audience?
Thank you, Mr. Briggs. So our presenter this morning is Patterson Boliga. He's the Managing Director, Patterson Consulting Limited.
Thank you. Can we give him a round of applause, please?
Good morning, distinguished ladies and gentlemen. My name is Patterson Boliga once again, and I'm honored to be making this presentation to you this morning. I'm just a little bit not too comfortable for not being able to control my slides. I've been told I can't control my slides because I like to move in a certain pace, which I don't know if the engine room there will be able to follow me, but please, let's try. I will try my possible best to keep to the movement of the slides. So just follow me if I tell you next slide. Okay. So I don't need much introduction, just that just so that those who have not known me before, I'll just give you a little bit background. I'm currently the president of the Compliance Institute in Nigeria, and prior to now, I was the Chief Conduct and Compliance Officer for Access Bank, and now I'm the MD of Patterson Consulting. And I've been around for quite some time, about 31 years before I retired, and previously worked with Citibank also. I'm an approved anti-corruption trainer also, just like as an anti-money laundering specialist. This discussion today is probably going to be like a summation of most of what you've heard yesterday, given the summary that I've just heard. The Securities and Exchange Commission, go to the next slide, please, is actually a critical player in the Nigerian financial system. And their role is to ensure market integrity, investor protection, and to establish robust regulatory frameworks to guide the market. So for this particular presentation, we are going to analyze the dynamics of Nigeria's compliance landscape, as has been affected by innovation, likely technological disruptions, and of course, the behavior and the new trends we see with the market players. Also, how we are also affected by global alignment and the need to ensure that we are reshaping the market in line with the ecosystem. So we're going to talk about the new Investment Security Act, what it pertains. I'm sure you must have heard quite a number of this yesterday also. How we align with global standards, the technological compliance space, which has completely disrupted the way we do business today, and of course, the way risks have also trended. Of course, we will look at governance and accountability, and then, of course, how we can improve operational efficiency. Next slide. So, in looking at how compliance has evolved, I've been in the compliance space for quite some time. I entered into compliance by accident. I'm a chartered accountant and an auditor, and suddenly one day I was asked to come and start doing compliance at the level of AGM, and I started. And here I am today. And people say I'm blazing trails for compliance in Nigeria, but then there are
if you are lacking in technology, in addition to training, the governance, and every other issue that he has raised. That is just what I want to say. Thank you.
Thank you for those comments. Next question, please.
Okay. Good morning, ladies and gentlemen. All protocols duly observed. My name is Stanley Golomo. I want to ask two very important questions from what Mr. Patterson discussed. He talked about regulation of the virtual assets, especially for SEC classifying all virtual assets as security. But in the virtual assets industry, we have security coins and we have utility coins. So I want to know, how can these two classifications be clarified by SEC so that we'll be able to understand global standards? There are utility coins and there are security coins. That is one question. Then the second is in terms of user protection, especially in the virtual assets ecosystem, where people can trade from the comfort of their home. They can trade on global platforms from Nigeria. So how will SEC manage this? For example, in the US, they have investor protection guidelines, and you see most of these platforms, when people want to trade with their products, there are specifications, there are instructions at the bottom where they'll tell users, if you are a US citizen, please do not participate in this particular kind of trading. But people from US still participate in these tradings. So how can this be checkmate in Nigeria to ensure that traders are being protected so that they cannot engage in certain kind of tradings that could impose risk to them?
Next.
Good morning. All protocol observed. My name is Usman Muhammad from Eco Espolo. My own question has to do with the KYC. So most of the time, the companies or the firms that provide access to confirm like a BBN or a third party, and it is not as fast as you can. So is it allowed that you can onboard a customer so that afterward you can complete the KYC? Is that allowed by SEC? Thank you.
Thank you, sir. Hello, sir. I don't know if you move to the next. So I know there's a question there that Abu Rashid, Dan Abu would also speak to. But you can speak to.
Okay, can you hear me? Good. Like the moderator said, if there's a question I cannot answer, I'll pass it on to SEC. Because they are regulators, but I can share my own opinion. But the first was actually a comment. Am I correct? You just made a comment, and I think I agree. I can't agree with you less. The best way to manage financial crime, compliance, fraud all over the world is through collaboration. And let me just share an example for you just to buttress what he said. In my days, we lost some money in our bank through SWIFT fraud, and quite some amount, about $10 million. And we actually recovered all of that almost all of that $10 million in 24 hours. Monies that have actually left Nigeria to other countries. How did we do that? Just because we belong to an association called the International Banking Security Association, IBSA, which is a collection of all compliance, audits, security, cyber experts, law enforcement agencies, the CIA, and all those, globally, from all the largest banks in the world. Because we belong to that body. All we needed to do, and we are closely knit, we all had our addresses and phone numbers, even have the phone numbers of our spouses. That's how closely knit we were. So we could call ourselves anytime. So with just a phone call to somebody in Singapore, he was able to call other guys in the network, and we were blocking funds in Singapore, in Hong Kong, in London. Within 24 hours, $10 million was recovered. Only some few dollars, I think about $15,000 or $11,000 that went to China that didn't come out. You see, so collaboration is very important, and we must ensure that we have good platforms like the CocoSyn. You know, make sure you make good use of CocoSyn to collaborate. I agree with you on that. Now, on the second question, visual asset, yes, you know, the new Investment Security Act, when it came out, it generated a lot of debate. Because, you see, the virtual assets system is evolving very, very quickly. And there are several, it's like an elephant. You know, one person will touch it this way, it's like this. So the regulators will have to then rise up to the occasion and try to see how they can cover everything. But I can tell you it's not easy. But I'll leave them to answer you on that. The regulators will answer you on that. How they are going to regulate utility and security coins. Then the user protection. You see, I said it when I was speaking just now that we don't take consumer protection here as seriously as we should compared to Europe and America. That example you gave is true. That when you are trading, you see a lot of warning coming up for you as a trader. And that is because those things were driven by regulation and law that has been put in place in those jurisdictions. So it's important that I think a little bit more attention be placed, and that is why, like I said, in Central Bank, they now have a compliance department. And that now focuses on the conduct at the marketplace. And one of the areas they are paying attention to is the consumer protection. So I'm sure with introduction of new laws, it can help in that area to protect users so that, but even sometimes there may be laws, but even implementing the laws may be an issue. Because how you communicate the law and how you implement the law also will determine how well people are protected. So even if there's a law, how do we, for example, I know some organizations that spend millions of naira putting adverts in the public space, doing billboards. If you're going on the road, you see some billboards saying, protect yourself, do this, do that, do that. Those things are paid for by some organizations. So all of these things are also part of the things that can also help to improve the level to which we protect users of the financial system that has become even more sophisticated today. One area also we have to pay attention to that we have not paid enough attention to is elderly people. You know that a lot of your clients, many of them are in my category now, 60 and above, right? And many of them are very scared of using technology. So there's what they call elderly protection. What kind of laws do we have in place to protect elderly people when they could easily be abused, even sometimes by their own family members, taking advantage of their old age? So what kind of protection do we have for those kind of people who use the capital market to make sure that they don't get, particularly now that you're telling them to do transactions from the comfort of their home with their phones? You know, how would you protect them if they don't have to go physically to a location that they are already used to in the past? Many of them also have lost a lot of investment because they are scared of using the computer or their phones even to transact. So these are the kind of things I'm sure over time regulation will evolve to pay attention to it and make it more stringent for the operators to provide, deliberately provide protection for those users. KYC, that was the last question, right?
Yes.
Well, I'll leave this for the regulator, but I can tell you from my own experience, you see, doing due diligence is not a straightforward thing. There are various kinds of bottlenecks you meet here and there. But there are, you need to apply risk-based. In other words, there are some KYC you do, everything goes smoothly. There are some that you do that you will definitely have bottlenecks. So for you to have a smooth operation, you must have in your organization policies, deliberate policies and procedures that can enable you operate without breaking the law. You know, there's one thing, you can bend the law, but you cannot break it. This is what we call red rules and blue rules. I mean, breaking the law means that you don't care what the law says, irrespective of the fact that you know that this is the law, you go ahead and do what is not right. That is breaking the law. But bending the law means that when you have the kind of situation you've experienced there now, you can actually report yourself to the regulator. You can actually go to the regulator and say, look, I have this type of situation, and I want to do this. This is why I want to do it. This is the nature of my business. This is how it's going to affect the ecosystem. These are the controls, and these are the mitigants I'm going to put in place. Would you allow me to do this? The regulators, people like the regulators, and they are also human beings. They are professionals like you. They will look at it with you and see whether it has merit. In fact, particularly if it has merit for the overall ecosystem. I'm talking from experience because I had that kind of forbearance before from regulators. Instead of breaking the law, and I knew that this is the law, and I wanted to do business that would even help the system, I had to go to the regulator to say, I have to do this. But you see, I'm constrained by this regulation. Can you help me so that we can do this? But these are I know what you are afraid of as a regulator, why you don't want us to do this. But these are the controls I'm going to put in place. Evaluate these controls. If they are strong enough, allow me to do it so that we can gain for this entire system. For example, if it requires financial inclusion, you want to bring a larger population of the system into the financial system. That is something that the regulator would like. So if the regulator likes that and he wants to do it, and then you are constrained by a regulation that is in place, the regulator can give you a forbearance and you can agree a modality. For example, one of the things I could do is that, okay, I'll put certain controls in place and I'll be giving you updates as a regulator as to how those controls are working. Can you allow me to do this for X number of months or X number of days? So if, let's say, for example, the issue is the BVN, your BVN is not available. Like you said, your KYC vendor has not provided you with the information, so you cannot open the relationship, right? So can you have a deferral, agree a deferral policy that can say, if this thing is not put in place within X number of days, the account will be shut down. Or if this thing is not done within, the transactions in this account will be monitored by XYZ people over a period of time, and we'll be sending reports to the regulator. And the risk is therefore mitigated. The risk that you're afraid of is mitigated for that purpose. And then after the period, you revert to normal. I'm sure every reasonable regulator will think through with you and look at the risks and the mitigants that you put in place and agree with you to do something. So it's when you don't have a process in place, and it's like politicians will say, anywhere belle face, that is when you run into trouble in breaking the law. And that is not advisable. So
thank you, sir.
In the UK, they say there's what they call comply or explain. That is the philosophy of compliance. Comply or explain, not comply or break. Thank you.
Thank you, sir. Just to add, yesterday I know we spoke extensively regarding issue of KYC, and at some point we agreed that there is a regulation and we just have to comply with those regulations. So KYC issues are very important issues that needs to be complied with. Now we want to call on Danabu to take the issue around, around the coin differentiation, please. Where is the mic? Ushers, please. Yeah, please come up.
Okay, so on that question about virtual and digital assets being classified as securities, if you remember yesterday, my executive commissioner spoke here about a test called the Howey's test. So if a digital asset passes that test of the Howey's test, that is when it is classified as a security. There is nowhere that it is categorically stated in the ISA that all digital assets and virtual assets are securities. There's nowhere, there's no sentence that says all. So that Howey's test is what is required to be passed before a digital or virtual asset becomes a security. So please, take note.
All right, thank you. Okay.
Someone's going to add.
Just to add to what colleague said, specifically about the utility coin and security coin. utility coin that is not meant for investment purpose. It's just used for, for transaction. That already we have given that guidance. But what I think I would advise, if you have this kind of proposal, write to the SEC, we'll look at it and give you the position. But there are clear difference between security coin and utility coin, just to add to what my colleague said. Security coin is the one that is actually meant for investment purpose. We have those clarification. But write if you have issues of this kind of proposal so that we can give you clear guidance in writing. Thank you.
Thank you, sir. So, Dr. Patterson, do you have any last word in 2 seconds?
Okay, my last word to us is compliance is everybody's business, and good compliance is good business. The senior management, the board should drive compliance with the proper tone at the top and ensure that you provide support and resources to your compliance functions. Get a good chief compliance officer that will help the system, and get a very strong audit that will give you assurance from time to time that the systems are also working and that everyone is involved in compliance, and that if you get compliance right, you are going to even get more business. Thank you.
Thank you very much. At this point, let's give him a round of applause. Thank you, sir. Yes, sir. At this point, we have to break for tea. Please, let's break for tea now. 25 minutes, let's be as quick as possible so we can gain some more time. Yes, as the same as yesterday, there is this side is for executives, please. We know the executives, please. This compliance summit, some people are smiling. So let's maintain that league. The executives and panelists and presenters should use this lane. Thank you very much. Thank you.
We're going to be having a panel session, and it's a panel titled Breaking Barriers, Inspiring the Next Generation Through Innovation and Financial Inclusion. So we know that the SEC is very big in innovation. That's why we actually brought on this session. I would like to invite the moderator and the panelists for this session. We have as moderator Mr. Olaoluwa Samuel Biyi. He's the co-founder and director at Busha, and Busha is Africa's leading virtual asset service provider. Please, a round of applause as he joins us on stage. Our panelists for this session are Ms. Janet Ekaite. Ms. Janet Ekaite is the divisional head, virtual assets and fintech supervision at the SEC. A round of applause, please. Joining her on stage is Mr. Obinna Ibuno. He is the chairman of Stakeholders in Blockchain Association of Nigeria, CBAN. A round of applause as he joins us on stage. We also have Bukola Ajibola. She's the general counsel at Roku. A round of applause as she joins us on stage. We have Mr. Peter Akudike. He's the compliance officer at Luno. A round of applause, please. Are we tired? And the last but not the least is Mr. Patrick Okechukwu. He's a renowned blockchain expert. A round of applause as he joins us on stage. Mr. Patrick Okechukwu.
So Patrick is still on his way. I hope he joins us somewhere stuck in traffic. So this panel will have 1 hour. There are a whole lot to discuss and a whole lot of information you can pass. So to the moderator, please comment. Thank you.
Hello, can you hear me? Wonderful. Good morning, everyone, and thanks for coming. On a much lighter note, we are discussing today how innovation, regulation, and digital finance can help to remove barriers for participation, particularly when it relates to the younger people and the youth. My name is Olaoluwa Samuel Biyi. I'm one of the co-founders of Busha, one of the provisionally licensed digital asset exchanges in Nigeria by the SEC. I'd love to introduce again my panel here this morning. To my right, immediate right, we have Madam Janet, apologies. She's the divisional head at the Virtual Assets Service and FinTech Supervision Department at the SEC. Of course, a very close contact of ours as we go through the regulatory process at Busha. We have the head of compliance at Luno, Mr. Peter, who heads the compliance function at Luno, also a major global or African exchange, and he heads the compliance function in Kenya and Nigeria as well. I have a good friend of mine, Mr. Obinna. He's very active in this space. He leads the Stakeholders in Blockchain Association of Nigeria, an industry group that helps with coordinating the sector. I also have the head of compliance at Roku, Mr. Ajiboye Yetunde. Thanks for coming, everyone. All right, we'll get started. I'm going to start with Roku. Roku, to my left. The question I have for you is, looking at our data and our user profile at Pusha, we know we engage a lot of young people. Our average range of participants are between 18 and 34, and I assume that is the same with Roku. You have a large retail user base. I know you're very active in the space, particularly when it comes to engaging the retail individual user. How can digital assets be introduced to this population who can be considered to be quite fragile in a responsible manner, and what are the practical steps that Roku has been taking to ensure that we introduce this very fragile demographic of people to this virtual asset space in a safe and compliant manner?
Thank you. Everyone can hear me, right? Okay. So my name is Bukola Ajibola Williams. I'm representing our head of compliance, so I just needed to state that so that you don't see me and shout here today and I don't respond to you. Speaking of young people, one thing I would say for sure is crypto is definitely on a rise when it comes to adoption in Nigeria. I mean, data does not lie, the statistics are clear, and we can tell that yes, we have more young people, engaging in transactions daily. But when we talk about inclusion, I think the first thing that we need to speak about is education, as cliche as it might sound. And the best way to do it is to educate young people. The way that you do it is the way that you hold their attention. So you have to bring things down to their level. Most young people have gone into crypto because of the hype, and some of them have been lucky. However, there's some people that have also been victims of, Ponzi schemes, scams, and things that no one would even want to hear about. So as cliche as it might sound, the best way to do that is to educate them. And the best way to educate them is to use avenues that hold their attention, things that they ordinarily like. So if you're going to be educating young people, you want to target places that your infomercials will catch their attention. The cinemas, for instance. I know that when I was growing up, when I go to the cinemas, right in the middle of a movie, the piracy advert comes up. And because of that, it caught my attention. I know what piracy is today. So when you want to talk about educating young people, it's not the usual textbook approach. It's not the usual terms and conditions approach. You'd have to look at, the areas where they give their attention to the most, and you try to inculcate the education, the orientation through those avenues. When you educate people, they do better. People do better when they know better. And with education, we would see that the rise of traps, scams, Ponzi schemes would decline, and people would then be able to transact in more regulated spaces.
Going over to Luno, I know Luno is a pretty global platform, and you're very rigorous when it comes to your compliance and your regulatory engagement across the markets where you're active, including in South Africa, where you're regulated, and also the markets you're looking to get into. How do you balance that, compliance rigor with, innovation, and also just bringing in these younger people that might not be as excited about traditional or compliance processes that you may impose on them?
Thank you. So the easiest way to balance compliance and business is by digitizing that compliance process. So what we did in the retail sector is to make sure that that process of onboarding for those young minds is as seamless as possible. They just need to provide their BVN, they provide their ID number. Then at the back, we do all the verification, all the picking up, doing address verification, all that whole process is being done at the back end. Just simply give us access to that on a permission on your mobile device or the device you're using, and we're able to carry out all that level of KYC. So actually the data that the individual is bringing on is as small as it is, but at the back end we are taking as much as we can. BVN has your name, your phone number, your biodata, and then your ID number has quite a lot that we need to make up that KYC that we need to collect on that particular person. So when it comes to young people, young minds, it's good that we know that the attention span is usually very short. And for you to get those people on board, you need to make sure that that process is seamless, is as easy as possible, and they have as little data as much that they need to bring in for you to fully verify them. And on your own side, to ensure that you're fully compliant, you ensure that all the necessary data checks are done with as much little data that you have collected. Thank you.
Thank you. And to the SEC now, the last year's compliance summit was focused on regulations and digital assets particularly. This year there's been a huge focus around the space as well. We know over the past 2 years there's been a very intentional effort around really designing the institution and ensuring that you can adequately regulate the space. So obviously it's of importance to you, how this evolves. I would like to get a sense just from your perspective, given that you now head a department specifically focused on this alongside the broader fintech space. How critical do you see this space broadly to the future of the capital market, and what is the SEC's approach to ensuring that the younger people participate in a safe and compliant manner without taking away from the innovation trajectory that we are seeing going on in the space, given that Nigeria is the biggest market on the continent for digital assets as we see today?
Thank you, Sami. So, can you hear me?
Yeah.
Okay. So already the young ones, or the young that no volume is not good. Okay. Thank you for the question. So the young Nigerians are already, we know they are very tech savvy. They're already in the space, participating and carrying out the financial services that are already there. So as the regulator, our mandate is to ensure that while we strive to promote innovation, we are also putting in place things to protect the investors. So for innovators that are in the space trying to produce solutions, to the young people, we are mindful of the fact that whatever innovation that you're bringing needs to be responsible innovation in this space, and also guided by basic principles. So for what the SEC has for the youth, we have principles that cuts across. Basically, the first thing is clarity. We bring clarity to the space. Thank you. So, clarity in terms of the rules and regulations that we put in place to ensure that whatever innovation that you're bringing to the space follow requirements that have been laid down. And then we now have safety. We look at safety in terms of if you're innovating for the young ones in the space, we ensure that the innovation that is being brought to the space is safe. Safe in terms of investor protection. Those that are going to key into the innovation you put in place things to ensure that the users are safe. And then safety in terms of the market. Yes, we promote innovation, but it will not be at the expense of the market. So we ensure that the market, the innovation that is coming into the space will not unsettle the existing structure. So both the investors and the market, we look at the controls that have been put in place to ensure that innovation does not stop the existing system. Then we look at the empowerment. Yes, for the young ones, information is key. So we strive to empower them to understand what they are getting into. I mean, you can't, they need to understand the risk. And really, the themes of this thing is risk and opportunity. So the young ones need to understand clearly that even though opportunity in this space abound, the risk also abound. So if the opportunities of getting low-cost transactions, transparency, they should also be made aware that, yes, while you're getting all the benefits, the risk that your asset can disappear, the risk that there's fraud in the system. So they need to be made aware of this, both the opportunities and the risk. Now, moving into what the regulator we have put in place for the young ones to bring them on board, So we have a lot of structure that we have put in place. Like for the SEC, the approach we have taken is, first of all, for innovators, is to go through like an incubation period before full registration. And what that does is that for innovation that is coming into the space, because the thing is, yes, the activity might be the same, the risks might be the same, but there's something that is different. The infrastructure, for example, in the blockchain sector, in the blockchain industry, the blockchain, the technology is what is different, what is new to everyone. So that is why the SEC for innovators will say, okay, come in here, let's look at what you're doing to ensure that the risk that this innovation is bringing, that it will be contained, we'll put in controls, then before we now fully, migrate you to the full market.
Thank you. Yes, we have been engaged in that sandbox, so we really appreciate the effort, at least, to understand the technology, and it's a learning curve that's going to take a while, but we are very pleased, I guess, with the openness of the regulator when it comes to the digital asset space. But for Obinna, you have a global view of the stakeholders in the space. You engage with us, very actively, the private sector, but you're also very actively engaging with the public sector, and you have a good sense of, the frustrations that both parties are facing when it comes to the space. So, from your sense or your judgment, what are the guidelines or changes that you think still need to be implemented to, take the industry to the next level, where innovation can grow while not compromising our position in terms of systemic risk and all those compliance and regulatory requirements of the market? So any changes that you assess that we need to still implement?
All right, thank you very much. So in terms of changes or guidelines that should be implemented, I think one of the first guidelines is regulatory clarity. We know that without regulatory clarity, there wouldn't be an ecosystem, all right? And from what we have seen so far, the ISA 2025 has launched Nigeria into that space, right? For the first time, giving us a form of clarity that helps the industry and ecosystem to be structured and also properly regulated. And that is one of the things that matters the most, because this is an innovative ecosystem. Young people who are building are not thinking of the risk first. They are thinking of solutions, innovation, right? And this is where the fusion of the regulator and the innovators come together to better shape things, because the regulator is aware of the risk that could be associated with an unregulated space, especially when you have an ecosystem that has to do more with finance and investments than it is with the primary solutions that it is meant to solve. And that's one of the misconceptions that still exists, right? Because the underlying infrastructure here is blockchain technology. That is the main thing, not the digital assets. Digital assets, virtual assets, cryptocurrency is just one of the tools, one of the solutions that blockchain can power. there is a whole lot. In fact, view blockchain technology as a bakery. And virtual asset is like chin-chin inside. It is not even the biggest solution that can come out of blockchain technology, all right? But it is the most famous because it has to do with finance. And it caught on very early. In fact, the very first implementation of blockchain, which is Bitcoin, was financial focused, right? And so it caught on with everyone. Now, that is an opportunity and a risk at the same time, all right? And so that has brought us to the point where we have this definition that, oh, there is now a recognition for virtual assets, and it has now been put into the law of Nigeria through the ISA 2025. Now we are going to see a properly regulated ecosystem. But it is one thing for the regulator to regulate, but the one who is practicing, how much of the regulation are you aware of? For example, I'm a certified cryptocurrency compliance specialist. You know, I got my certification as far back as 2021, right? And the very first in Nigeria to get that certification. I think as at the time, the only persons who were practicing crypto compliance in Nigeria was Adedeji Owonibi. So why did I do that? I have seen the future. And I know that we are coming into a regulated space. As at the time, I was the secretary of the Blockchain Association. I know that regulation is inevitable. And so we must prepare ourselves to understand regulation and how to implement compliance, because there is no way you can run freeway. So now the regulator is regulating, but the operator and the innovator also need to understand compliance. And this is where we stepped in. We stepped in the area of giving compliance education, right? Partnering with all of the regulators to make sure that even if you are a community manager, that you understand the basic level knowledge of compliance, right? And we moved it a step further. Now we developed a code of ethics, which is the best in the industry and the only in Africa, you know. And that code of ethics, you know, outlined every guideline as a member, as a practitioner in the ecosystem, and even as an operator. And then we mandated operators within our ecosystem to do two things very important. One, you cannot offer service to any customer who is not fully KYC'd. All right, so you must know all of your customers who are performing transactions on your rails, right, on your platform. Secondly, you must employ at least a minimum of 2 compliance officers in your company. That is part of our self-regulatory work as an association for the industry, right? And then we moved it further. Recently, we organized a workshop in partnership with the NFIU, right? Majority of our ecosystem players are not reporting, not because they don't want to report, but they don't even know about that. If you ask me of one of the certifications I think of getting in my life, compliance wouldn't be one of them. All right, I'm tech focused, I'm thinking of technology, I'm thinking of innovation and solutions. But because of the industry that I play in, I have now seen that, oh, compliance is a major requirement in this industry. In fact, good compliance enables business. It is not a restriction. That is one of the things that operators need to understand, right? And so with the NFIU, we worked on reporting. So you can see that we are taking guidelines in compliance, right, for regulation. Quickly, the other part is where we talk about support. The other day, I asked a question. Why don't we have a blockchain innovation fund the same way we have a petroleum technology development fund? Because the blockchain ecosystem, we have seen some of the figures for this year alone. Has the petroleum industry produced that amount of figure yet? The truth is, we have a massive ecosystem that can position this nation rightly. We are number 2 globally in adoption. We are number 1 in Africa. Over 60% of Africa is ours, right? So what are we doing about that? This is one of the things that is lacking. There are a lot of innovators, but very little empowerment and support. And these funds that I'm talking about are not even outside Nigeria. They are in Nigeria. But there seems to be a mismatch between the people who have access to these funds and their understanding of the technology. So when most people hear about blockchain, the first thing that comes to their mind is, oh, cryptocurrency, oh, it's volatile, oh, speculation, and all of that. And the truth here, we understand traditional financial sector and the investors. They want a more stable ecosystem, right? A more stable industry. There is also stability. It's just that there exists very little information on their part, and that is why we are creating a lot of businesses and companies that are not just building solutions, but are also involved in providing services, right? So there is a whole lot we can talk about this, but these two are very key to, growing the ecosystem.
Thanks, Obina. I'll go to Roku now. Just generally, I think from the last session with the doctor, he spoke a lot about partnerships and collaboration across the sector and across regulators. What kind of collaborations do you think, across the industry with regulators or universities, academia, really most useful in terms of supporting this youth-led innovation? Given Roku's history and your growth over the past few years, which has been very impressive, what sort of collaborations have helped you get to where you are today in terms of your scale?
Thank you. I would say that collaboration has been one of the most effective tools in the growth of this industry, and particularly for Roku. One thing I would say for sure is the first level of collaboration has been with the regulators. As unregulated as the industry might seem to laymen, it's actually quite heavily regulated. Even if licensing might be in development, licensure is an activity, compliance is a behavior. So I would say that one of the collaborations that has really helped Roku is the engagement with regulators, whether with workshops, with training. If there is a regulator that would reply an email, it's the Securities and Exchange Commission. When you're not even sure, I'm not sure where this stands, you've spoken with your chief compliance officer, head of legal has given input. I'm like, let me just ask SEC, please. And that collaboration has been really effective for Roku. Another layer of collaboration that has been very effective is collaborating with the academia. You see, earlier I said that you have to find a way to catch young people in their areas of interest. And there are a lot of young people in the universities. So I'm sure that quite a number of people here will be familiar with our campus ambassadorship program, as well as our academy. We call it Roku Academy. It's completely free of charge. You don't have to pay anything, because we understand that when you're in the space, it's easy to get in the space. That's what blockchain has done. The easy access, the seamless yet compliant onboarding. But people need to know what they're getting themselves into. And collaborating with the academia, with clubs in the universities, having campus stores, that has really helped. And I would say that another collaboration that has really been helpful is actually collaboration with other players in the industry. From time to time, we find ourselves in meetings. For instance, quite a number of players are in CBAN. We meet in those meetings. We meet ourselves in functions like this. We co-enable events, and those are the collaborations that have really been effective. So I would take it from regulator collaboration to academia collaboration, as well as collaboration between the players in the space. I don't think we would have gotten this far without collaboration, and that's been the wonderful thing about Roku's journey, and I'm pretty sure every other player would testify to that.
That's wonderful. Yeah, I absolutely agree with that, 100%. Luna, real quick, talking about these innovations more specifically, when people think about the crypto or virtual assets or digital asset space, usually from a very limited lens of, Bitcoin, Ethereum, just a very close spectrum of crypto assets. But the industry encompasses a lot more than that, when you think about the blockchain, it enables just tokenization of value across the board. Luno recently introduced into the market in South Africa, for example, and also I think in Nigeria, exposure into tokenized versions of stocks. How do you see these types of innovation really catalyzing the capital markets going forward and expanding the base of investors beyond the larger mainstream, but also particularly the younger people that are trying to get into this space, who might be more focused around things like gambling or forex trading? But how do you expect the blockchain-enabled innovations to expand the profile of people that participate in the capital markets going forward, as you guys are leading in terms of the product development there?
Okay, thank you so much. Yes, like you rightly said, we launched tokenized stocks, US stocks in the market. And then, truthfully, it has got the attention of so many young people. The way we launched it is such that they don't need to look for Forex to do their transaction. Those stocks are actually denominated in Naira on our platform. So you're not looking for FX to trade. This kind of innovation, what it does is it spurs the minds of young people to think outside Nigeria. Recently, we're now seeing things around real-world asset tokenization, and many young people are getting interested in this. We had someone speak about what's happening in the real estate, which I would say that the SEC needs to take some time to look at that area, because we're going to see in the future, with the innovation we're going to be seeing, young people coming up with different methods of using tokenization to achieve different things. In the future, you would see a young person who wants to start a car manufacturing factory, maybe has some money but doesn't have all, come up and say, okay, I need people to contribute this money for me. I don't want to go out there and raise funds from maybe in the US or Europe, but I'll raise the fund locally here. And that fund can come from retail, different people. So retail is many people coming together to bring their funds in. And these are things that you're going to be seeing. And these are peculiar. What does the regulator need to do? Regulator needs to pay attention to understanding that process. So if you check in the Kenya Virtual Asset Service Provider Act that has just been signed into law by the president, there's something they have there. The operators provide read-only access to the regulator, who is able to see the activity, understand that activity. It is important that the regulator should do on a case-by-case, understand what these young people are coming with. What we're going to be seeing in the future, the innovation we're going to be seeing, would really help in the growth of the Nigeria as a whole. We're going to be seeing more employment. So AI is coming in, machine learning is coming in. People think it will take jobs, but they will not actually take jobs. We're going to be seeing a lot of young people who are going to be creating new things around that area. When mechanization was coming in those days, the farmers thought, oh, jobs will be taken, machines will take over everything, tractors will do all the job. But what happened? There was creation of electrical engineers, mechanical engineers, different types of fields that were not existing before that time came to be. And that's what we're going to see. We're going to see young people who are going to come into that space and try to create something different. The regulator on their side needs to be there to monitor, hey, what's happening? For a CBN, they need to make sure that funds from Nigeria are not being used to service other countries, because when we're talking about virtual assets, is something that can easily, the NFIU basically requires virtual asset service providers to render all their transactions above $10,000 as foreign currency transaction reports. Now, why is this? because they classify all activity from virtual asset service providers across wallets as foreign currency transaction, which means it's easy to move value across jurisdiction, with virtual assets these days. So I would say that the innovation that we're going to see in the future, and which is already coming, is going to come from many young people, as it is now. I see you, Busha, a very young person, and we're going to see more and more people coming to disrupt this ecosystem. When they are doing this, we need a regulator to be able to follow through, have an open mind to see what they are doing, understand their business, and then the process of licensing is very critical. When something is left in the dark, when it is illegal, that becomes a very lucrative business, and people can easily do anything they want to do in that space. But when you regulate that space, people are, Mr. Patterson spoke about governance as a major problem with the companies that young people have built. When the regulator has brought in that process of governance, they do reporting on their governance structure. You determine the kind of people they should have on their board. So I'm coming from a CBN regulated entity. We have when it comes to board representation, there is a fit and proper process that has already been mapped out by the CBN and says each board member must be at this level. And then these are the kind of people that need to be on the board. Very critical for the regulator. That brings in that governance side of it to help these young minds in their innovation. Because for most areas I've gone to and I've seen young people, what I have noticed is they don't want to think about compliance initially. They don't want to think about governance. They think regulator, this cryptocurrency, we don't want regulators, we want to be able to do it. But you can't actually do an effective business that protects the people that you're offering that service to without having a regulator come in. So regulators being able to work together is very critical for the innovators. So we don't have to report to multiple regulators. We don't have multiple regulators regulating the same kind of business, because that's what you're going to see in the future. Digital assets, real world assets, they speak to multiple regulators. And it's high time that regulators think about coming together and forming the right forum to help provide single point of contact for each of these innovations that will be coming in the future. Thank you.
Thank you. Thankfully, the ISA has also preempted a lot of these future-looking innovations, particularly regarding securities in the tokenized RWA, real-world asset space. We are already actually engaging with several other regulated capital market operators, fund managers, custodians, towards potentially tokenizing some of these traditional local currency assets, real estate, commercial papers, fixed income securities, stocks, and figuring out how to layer the blockchain's enablement to ensuring that they come to life. And then we can also help them. We have a user base on the retail side approaching 1 million people now, distribute those assets more broadly to this category of users who might not be traditionally participating in the real sector today for whatever reason, either technology or some sort of barriers to entry. So very excited about that. And to the SEC, we, of course, have been very close over the past few years. Forums like this are also very frequent. We have this annually. You have a recent one that happened in Uyo. Just how do you ensure that this sort of engagements diffuse more broadly across the country? When you look at the victims at the ground floor of this, a lot of these Ponzi schemes and these securities frauds that we see, there happen to be a lot of people in the interlands, in the rural areas, away from the urban centers, who are might not be the only victims, but the ones that suffer the most from all of this, because for some, with a lack of education or just access to information. How do you ensure that, or what are the activities that the SEC is engaging in to ensure that its educational activities expand beyond the urban centers, more into the rural centers? Fortunately, we have the support of the SEC as Busha to push out some online programs. We're launching a program with Cambridge University now for an executive certificate, but that is still sort of a very elite, high-profile system. So how do you ensure that the ground floor, the mainstream really participates or understand what's going on in the digital asset space so that they don't fall victim of all these fraud and scams that are going out there?
Okay, thank you, Sammy. But I thought you were going to respond to him because when he talked about Ghana having given the regulator see only, I thought you would tell him that by 12 midnight, you're pushing your trading data to SEC immediately, and that SEC, if we want to see your transaction with your wallet, we can trace your transaction to anywhere. So I thought you speak for us. So please, we have gone beyond that. The SEC is innovation-focused regulator. We have put a lot of things in place to support the ecosystem. For tokenization, already we have several blockchain-based models that are testing in our regulatory incubation on real-world asset tokenization. In fact, we're reviewing application to issue real-world asset-backed tokens to the young ones, which is something that the young ones can key into because it enables them to have fractional ownership to assets. They become part ownership of that asset. And then we have so many, Obina, you talked about blockchain being, that digital asset is a bit on, is just my on the blockchain. See, we look at the activities that is going on the blockchain. It's about investment for SEC. It's about investment businesses. Whatever you're doing, if it's an investment business that balls on returns on investment, the SEC look at it. There are so many things that sit on the blockchain. Blockchain is an infrastructure. Blockchain is more or less like a database. Application sits on blockchain. If you have an application that is facilitating trading, if you have an application that is enabling investment advisory, collective investment schemes, those are SEC-regulated activities. So we look at activities that go on the blockchain. Yes, we look at the blockchain because of the technology and the risk that comes with it. And then we collaborate with the relevant authority. For example, the National Technology NITDA, to ensure that data protection and things that relate to their own regulatory sectors are being put in place. So the SEC focus, I will say again, is on investment activities. So we're not going to be, there's a thin line between what SEC does. In fact, the beginning of our regulation is the end of another person. So there's a thin line between the activities. So our focus, investment activities, if the blockchain is enabling, maybe facilitating cross-border payments, of course, you know where that goes to. If it's facilitating insurance, you know where that goes to. If it's about pension fund. So for SEC, as long as your platform is trading, as long as your platform is giving advice, as long as your platform is facilitating collective investment scheme, pooling funds, taking for yield farming, it is the SEC's business. So coming back to how we're going to get the youths, reach out to the youth. The youths are already in the air, and I would say the regulator is also in the air. Those that engage with the SEC, we don't even encourage physical meetings for you to, pay your way all the way from Lagos to get to the SEC to, have your meeting. So we're going to meet the young ones where they are, which is in the virtually, I will use in the air. So we'll have structure in place to ensure that our education, I said it before, it's about education because they need to understand what they are getting into. They need to understand that the risk that if they are trading on Telegram, and then the benefits they will get in trading on a regulated exchanges, they need to understand that so that they will see why they need to migrate from unregulated platforms to the regulated exchanges. So we have things in place to encourage the youth. We have sensitization. We are collaborating with, stakeholders, promoters like you to reach out to them. In fact, there's something I noticed recently, which we are going to key into. The election years are coming. So I was engaging with the young ones, and he got me to understand, that he was traveling to his village. I said, what's going on? He said that his one of his senior, mentor is in the politics and is going to speak to the world. So what he was going there to do was to educate the young ones on virtual assets, how to access the virtual assets. So I thought about, I said, oh, that is another way of reaching the young ones. During the political era, you speak to them. We partner with those, young ones to speak and educate the young ones on the benefits and the risk, because that needs to be clearly stated. So the SEC, it has plans in place to do something like Investor Clinic, which is an online webinar that we have quarterly, that we engage the youths and then tell them what we have, encourage them and see the innovation or, things, the activities that we have in our regulatory incubation in which they can key into. So for the SEC, we're already meeting the young ones, both in Nigeria and even across Africa, where they are, which is in the air. There's something that the SEC does recently. Every Thursday, we have Sensitized Thursday. Every SEC staff is expected, and they do it. On every Thursday, they sit on their system. Some go to the market or any, places that they are assigned to. But majority of the staff are mandated. On your social media profile, you have followers. Every Thursday, send out messages on Ponzi schemes, send out messages on fraud, and we encourage everybody to do that, because if you send out that Ponzi scheme, it's, it's risky. Imagine 10,000 or 5,000 people following you, getting that message. And imagine what will happen if all of us here every Thursday or at your home, you just post that message to the youths, which that is where they are. So they get to see that, oh, this thing, even though there is benefit, there is also risk. And so they get informed to make that risk-aware decision. So, thank you.
Thank you so much. Wonderful. Yeah, just your earlier comment, I think a lot of players in the space, even in the capital market, and also even our clients, don't appreciate the process behind the curtains when it comes to our engagement with the regulators. We have daily reporting of trading information, and this is even programmatic beyond, it's quite advanced in terms of how we report information. Even before the clearance to get into the provisional licensing regime, there were checks on the personalities behind the platforms. All of the fit and proper checks went through all of that process. Even things as mundane as customer complaints comes directly from the SEC in terms of just ensuring that the customers feel safe and protected. Disclosures around how we market and how we advertise things, very highly controlled currently in the regulated space. Things around the assets we even list, the listing criteria for assets, extremely rigorous. So all of these things are already in place. And of course, it's a big space, so it's going to take a while for it to spread across the space as more people come into the licensing fold. But I'll say the rigor when it comes to the Nigerian licensing regime and process is very world class. And we've been through licensing process in multiple markets. In Kenya, Ghana, licensed currently in Poland, in Europe, we've been licensed in Estonia in the past. So we know how these things work. So we have a very positive outlook in terms of what the future looks like when it comes to compliance for virtual assets in Nigeria. And I'm sure it's the same thing that you guys are facing at Roku and Luno as well when it comes to your interactions. And that's why you see us on forums like this with the confidence of the regulator behind us. Just some closing commentary before we wrap up this very, I guess, interesting panel. If you had like a dream policy in terms of, what one policy would you hope comes on stream in the near future that has the potential to really bring in a lot more people, just a quick hack, a policy hack that you think can be put in place to encourage more young people to come into the digital finance space more broadly, even beyond the crypto or blockchain space?
It's on now. I'm smiling because I feel like it just made one of my childhood dreams come true, where I'm proposing policy suggestions. But if I could say two things, if I was given that opportunity, I would say that it should be a policy that for every major industry that intersects with the financial space or with the investment space, we should have a starter toolkit. Yes, I'm saying this because it's very brilliant to build, and sometimes builders are just really excited. But I'm not sure that most of them are aware of the compliance obligations that comes with the space they want to go into. So as a policy, I would say that let every primary regulator and secondary regulators, because there are primary regulators and secondary regulators. Just because you're regulated by the SEC doesn't mean you don't file annual returns with the CAC. There should be like a starter toolkit. So for every founder, every builder, you can just go to the website, what's the starter toolkit for this industry? Governance, compliance, and then they know what they're getting into as they build. I think the second thing would be a policy that ensures that education orientation is demystified, in the sense that when you build your apps, when you build your web apps, you should have different languages compulsorily. You should also build for young people and elderly people in mind. So the way that the terms and conditions or an infomercial will pop up for a young person is different from the way it will pop up for an elderly person. So I think that would help with inclusion with regards to user base. And I think the first one will help builders and founders to know that, yes, I'm building and I'm excited, but as I build in this industry, this is the starter toolkit for this industry. I think that those two things would go a long way. And thank you for asking that question. I'm brimming with joy in my stomach.
All right. Thank you. For me, that one policy would be a blockchain innovation policy, right? And the reasons are this. Blockchain can power a whole lot of things, right? And as a country, we sit at the verge of opportunity. This is the one time that I have seen that Africa has the same opportunity now to leapfrog and level up with the rest of the world. And Nigeria seems, it's not seems, Nigeria is sitting at the very top of this, all right? What our teeming youth population can do with blockchain innovation in other sectors, all right? And that is one thing that I would love to see. One of the things that we can benefit from this is, you know, we talk about digitization, right? We talk about the digital economy. In fact, look at it this way. The world is currently sitting on the second generation of the internet. At least over 90% of the world is sitting on the second generation of the internet, with less than 10% on the third generation. Between, let's say, in the next 5 to 10 years, the whole world is going to move into the third generation of the internet, known as Web3. And what is going to power that third generation of the internet? Blockchain technology. It makes smart sense for any country to take blockchain technology very seriously and prioritize it as a national policy. This is one thing I am advocating for, and this is one thing I think that our nation should take very seriously. The President of the Federal Republic of Nigeria has, shared his vision of a $1 trillion economy. I dare to say that blockchain technology alone can build a $1 trillion economy for Nigeria. Let the rest of the sectors build the next $1 trillion. So we could be looking at a $2 trillion economy. But if we do not do what we need to do to harness blockchain technology, we cannot achieve that. In terms of compliance, blockchain implementation is going to enhance compliance to a very large extent because blockchain possesses the characteristics of trust, transparency, and security. These are the core pillars that is upholding blockchain technology, and that is why it's a game changer for the fourth industrial revolution and the 21st century, right? Another great thing here is that we all sitting here are capital market operators. I tell you that the implementation of blockchain technology is going to help deepen the capital market. Look at the teeming young population that is in the digital asset sector. We are talking about over 35 million people 35 million young people transacting in this ecosystem. I know that there is no sector in the capital market, no exchange in the capital market can boast of that number. How can we integrate these people? How can we onboard them into the traditional capital market? By implementing blockchain tools in your offering, things as simple as tokenizing your stocks, your shares, your bonds, and all of that, right? And even look at what we can do with relay. So blockchain will address all of these things. So if we can get a national blockchain innovation policy right, we are on the pathway to building a $1 trillion economy.
Just a quick one from Luna as well.
Okay, thank you so much. So for me, that particular framework would be interagency interaction. Okay. It's very critical because the last place I worked for, the last bank, I did the virtual assets policy, and it simply states we don't want to do anything around this. We don't want to get involved. We don't want to be part of the players. Why? This is a top-tier bank in Nigeria. They have been fined by the CBN as much as 500 million naira for having transaction narration that relates to virtual assets. Now, on their own part, the CBN is saying something else. The SEC has an ISA Act that is saying something else. Whenever the examiners go to a CBN-regulated entity, they are searching transaction narrations for crypto-related transactions. They are speaking different things. They need to come together and speak the same language. That's what will help this ecosystem to grow faster. So it's very important. It's very critical. Thank you.
Thank you, and that brings us to a close for this panel. I hope you found it enlightening, and thank you very much for having us.
Thank you. This has been very insightful. And I guess there are a lot of people who have questions to ask. So we have the regulators seated, we have practitioners, we have an SRO also seated. So it's important that you ask the relevant questions at this time. Ushers, please, can you take those mics round? Any questions? Who goes first? Okay. 1, 2, 3, 4. I guess we are 5. So 6. Okay. So ushers, please.
Good morning. My name is Emmanuel Igbumoke, Plethora Advisory. My question is to, can't remember his name, second to the last by the right. You were talking about what we need to do to achieve a $1 trillion economy from the blockchain end. And from my experience in Nigeria about policy, you are proposing a national blockchain integration policy. If you want to get a policy in Nigeria, you need to sit down with those who need to be heard and put that policy in place yourself. Put it together and lobby for it to be implemented. So if we are waiting for government to put that policy in place, mind you, most of the people you are talking to don't even understand what blockchain is all about. So let's not deceive ourselves. Even those who are claiming Nigeria's $1 trillion economy in 2030, they don't even understand the mathematics that can achieve it. So if we really want to achieve this blockchain technology policy, we need to sit down, put it in place, and go to the National Assembly and discuss with them so they will understand the implication. put the figures in place so they will understand what we can do with it. That area is an area that is already driving itself without government assistance or input. So the best way for you to do it is to do it yourself and get it to those who are going to approve it. So if we are waiting for them to do it, they won't do it. That's what I've discovered, and I've seen it in several industries. If you want to get it done, the best way to do anything is to do it yourself. Put it together and take it to the people that will understand it. Thank you.
Thank you for that contribution. Who next?
Thank you. My question is to Mr. Obin. You mentioned that your own policy suggestion would be a national blockchain innovation policy. And so my question to you is this. I know that cyber was involved at some point in the process leading up to the national blockchain policy during the Buhari administration. Are you saying now that that policy is inadequate, or that cyber did not contribute to that policy, or there are some changes you'd like to see? That's the first part, and that's the question. I have a comment as well. I think one of the things we've not discussed so far is about license passporting. We are seeing international developments in that regard, especially in terms of technology-focused platforms, digital assets, virtual assets. I don't want to throw it as a question because we work very closely with the SEC, but it's something we need to start considering the fact that IOSCO itself, which is the standard setting body, has already has made significant provisions for mutual recognition of licenses. And so we need to start working towards that as well giving the advantage to homegrown institutions such that when we go abroad, we're able to get some of these concessions and also applying it to other VASPs from member countries. Thank you.
Thank you.
Yeah, my name is Jerome. Let me say I told the line of Obine Uno. This is the second time I'm listening to him. If you listen carefully, his concern is that anytime there is any financial innovation or product by young Nigerians, the people at the top see scam, see a fraud, see all sorts of things around it. Now they request, and I share in that sentiment, because if we continue like this, while other people are making money, breaking the wall, we are here talking about it. Now that was why he said that his problem is not actually compliant, it's technology. How to go out there and make money. The question is, how do we encourage that? Because we are saying here, by the time we leave here next year, the next summit, we will still be saying the same thing. Nothing will be done. Is it that there is nobody in this room that can take it off from here? We are in this country when MMM started. Where were those people? CBS came again. These are not Nigerians. Yet we try to kill Nigerian innovators. How do we go about it? Thank you.
All right, thank you very much. My name is Bright Ayon. The first question I would like to ask is regarding collaboration. If we look at the pattern, even in terms of the flow for virtual assets, you see that there seems to be some interface between what SEC should regulate and what the CBN should regulate. Certain aspects of the digital asset, like stablecoin, has all elements of a payment system, which, if you are looking at it, appear to sit within the confines of the CBN. What is the way forward? Why I'm saying this is because if you look at from a legislative point of view, the Janus Act and some other things that are happening in this space, you see that there seems to be a clear, delineation regarding what stablecoin is, what other assets right? Digital assets, what their use case is. My question is to SEC. Is there some type of thinking going on as to, yes, I know the ISA, new act, has given enormous powers to SEC to say that maybe this aspect of the digital asset is actually not within our confines. Can we make it sit where it should sit? That's one. Regarding tracking of illicit assets, is there a plan to think around a national node such that security agencies, can have access to some of these nodes to see these transactions even before they get validated on the blockchain? Why I'm saying this is because given the state of insecurity in our country, I don't know what scientifically is the lifespan of cash, because most people that collect ransom collect it in cash, from what we hear from victims of some of the kidnappers, that we've seen in the past. It is not unlikely that some of these, cash may even find their way to some wallets, more especially those unhosted wallets. What are we doing from a security perspective to ensure that we have adequate security to know who owns what wallet? The bigger problem is not the custodial wallet in the hands of the digital platforms, but what about those people, that hold this wallet on their own? What are we doing in that regard? Thank you.
Okay, thank you. Any more? I know we have one here, please. We have one in front. Yes, okay. You can come on.
Thank you. My name is Moses, and the question or shared concern is to the gentleman from Lunu. And you raised the concern about the CBN specifically, still having reservations. So I wanted to clarify. The impression was that was then. Are there still that reservation regarding, virtual assets being transacted through the banking sector? Because this issue of regulatory collaboration is a very key FATF recommendation. And one thought that we've gone beyond that as regards this virtual asset space. So you needed to clarify whether that was then or is still ongoing.
Thank you. Please come. There is someone also here. Come with the mic. Yeah, go ahead.
Good morning, distinguished ladies and gentlemen. Please permit me to stand on the existing protocol. Mine is more or less an appeal to the regulators, because when you consider what is going on these days, API calls, cryptocurrencies, digital assets, as you keep saying, is the new way of life. Will agree with me that the initial time CBN decided not to even make any regulation about it. Their position was to kill the entire thing. But at a point, SEC came up and people started agitating. They now decided to look inward on how to perfect the position. Eventually, they know that it's the way of the new way of life. The world has keyed into it, and we are now talking about regulation. Now, my appeal is the regulators must truly understand the product. That is, they must have that product knowledge to enable them regulate properly. They must be ahead of the operators in terms of the product knowledge. Because if they don't have it, it becomes very difficult for them to regulate. And that is why you see we continue to have this incumbent period and difficulties in licensing. So they had to understand this product and come out a proper guideline what these digital asset operators will follow to get licensed. This guideline can be improved as time goes on based on the development of things. just like it's happening in other capital market operations. With that, we'll be able to have a proper headway on how to push these digital assets to the entire world for us to really key in properly. Thank you.
Thanks for the advice.
Good morning. My name is Abdul Baki Suleiman, and building on the point of collaboration, and I listened to the panelists and they spoke on certain issues about multiple regulations or multiple regulators in the space. And most recently, I think in October, we got the news of the National Assembly, specifically the House of Reps, seeking to, establish a new commission for fintech regulations. Now, I would like to understand the perspective of both industry players as well as the regulators as to why is there a need to create another regulatory body as against trying to harmonize what we have. I understand the fact that the space is heavily regulated and you have to interact with different regulators. But then, what is the need for another regulatory bodies when we can harmonize and have a window, right, where regulators can harmonize and synthesize information and make licensing issues better and make the ecosystem work better? Thank you.
Thank you. So, Smart.
Yeah, I guess I can take a first stab at some of the questions and then pass it on as necessary. I think maybe the question around whether or not the handshake with the banking system has improved since the banking ban of the previous, central bank regime. For about 2 years now, there's been a circular out there by the central bank that authorizes formal engagement between regulated VASPs and the banking system. And over time, of course, the banks have been softening their positions. We are at the point today where, for the first time in a long time, we have formal bank accounts with certain banks. But of course, there's that whole PTSD from the past. They've gotten fines in hundreds of millions on a whim for very minor offenses in the past relating to digital assets. So a lot of banks are still very cautious about interacting with this space. I think it will take some more explicit and very direct communication from the central bank, really giving them the guidelines and clearance around interacting with the space for it to really return to the previous state and the status quo. So we definitely still need more can be done, but I think we're in a better place today than we were two years or so ago. And in terms of whether or not the central bank is involved around when it comes to regulations of certain categories of assets, particularly stable coins, they are very interested in that. I can say that we are very actively engaged with the central bank around stable coin specific use cases, and they are also educating themselves around how the use cases are evolving locally. I think there will be a sort of a dual mandate, even when it comes to stable coins, because at the end of the day, the tokens that represent these stable coins, they are some form of notes. It's a claim against a Naira balance somewhere. So it's a form of a bond when you interpret it in one way, but the use cases are for payments and for FX. So it's also within the purview of the central bank. So there will be some sort of handshake between the SEC, central bank, the NFIU, the tax authorities regarding the broad spectrum of crypto assets, whether they are securities, because some securities are also used for payments use cases, but also for stable coins as well. That collaboration needs to happen. But it extends a lot broader beyond the SEC and the central bank. There's the NFIU, there's the tax authorities. If you look at the tax laws, digital assets are written in there more frequently than in any other law that you find out there. There is the new NICDA law that just passed a third reading that talks about digital economy regulations broadly. There's the new NAS, Virtual Asset Service Provider proposal around an agency there. So all those engagements will keep happening. But I think, CBAN with the private sector, we are just doing our best really to get us to a place where, we achieve successes like get out of the gray list and hopefully more and more things like that in the future. I want to take a stab at some of the questions.
You have? Okay, let's have.
Just on the banking aspect, I think what the situation is, like you rightly said, there is some flexibility But I do think that the operators themselves are suffering from something I call some kind of trauma. So there was a circular that they're relying on. Technically, the circular does not stand, but they are not sure. There hasn't been a recall or another circular that explicitly states that, oh, this circular now supersedes the circular that was released sometime this year. So the banks, the banking partners themselves, I think they just have this trauma issue. Yes, they can do it, but you're not sure, so they will give you reasons, and then you then have to write a legal opinion to them, explaining that, yes, this was said at the point, but this has been said, that has been said. If you're satisfied with your legal opinion, you might get lucky and have an operational account in one of the banks in Nigeria. So yes, things are flexible, but we need to, if the representatives of the relevant regulator is here today, we need to take an active step to help them cure that trauma. That's what the problem is. I don't think the issue is that there's no document that speaks to words. It's like when you flog your child, you forgive your child and say, come and eat, but they're afraid to eat, even though you've told them to come and eat. It's just a funny thing. So we need to do something that will cure that trauma for the banking partners themselves, so that they can know that, oh, this has come to stand.
Okay, thank you. So I think they have addressed the banking issues because they are the operators that are directly affected with this, and we as an SRO are also affected with what affects our members. A gentleman asked a question over there about a regulatory body. You know, the same concerns that you raised was the same concerns I raised when I saw that, say, oh, a new regulatory body for the fintech. And I asked, why are we not coordinating this through one body? Why do we have to create a new body when there is already an existing body, right, that could regulate this? What is it especially about fintech that necessitated it to have a new body to regulate it? It is simple that if there is a new innovation or development in fintech, it is also for the existing regulator to come up to the standard of the new, or the awareness or the knowledge of that new innovation and development, and then be able to capture it. It's just like what we are talking about, the digital asset. 20 years ago, there was no digital asset. And so the regulator had no business with looking into digital assets. But today, digital asset is a thing. It exists. Do we need to now create an entirely new body for digital assets? No. Let us look at what are the properties of digital assets, what are the characteristics of digital assets, and see how it sits with the relevant regulator. Who should regulate it? Because the more we keep fragmenting these things, you are hurting an industry and an ecosystem. We feel the pain the most because we are the ones in the market. We are the ones burning money every day, trying to innovate, trying to build. I mean, like Roku has over 200 staff that they pay. So when you are making business difficult for them, it is a burn in their own part, right? So for that, I think it's a Nigerian problem, right? I think sometime in September, right? It was in September or October, we had that workshop in Abuja. Mr. Abdul Rashid from SCC was there. It was organized by MTech, the CBN, and FRS. And this same thing was raised. Now, you are talking about the fintech. There was also such kind of discussion and conversation around virtual assets, right? A virtual asset regulatory authority. And I'm asking the same question. Why are we seeking to build a whole new entity for this when there is already a recognition for this thing that can be, brought together, and you can have that? He talked about collaboration. I think that what they need is a collaboration. What the regulators and the agencies need is a collaboration to properly regulate this space and enable this sector to grow, because all of this back and forth, all of this stressing, I don't know what it is between the regulators, but it is hurting an industry. And this is the thing here. Nigeria stands to lose out in the global race. I don't know how much we can say this for the country to understand, for the government to understand, and for the regulators to understand. Nobody is waiting for you in this dispensation to catch up with them. What will happen is that if we slack and fall back, we will be programmed to become a consumer continent again. In this innovation that happened right before our eyes, the implementation of blockchain technology is just 16 years old. We are still very early to the game. You know, so this is why we must take it very seriously. I think that the regulators need to come together and put their house in order. For us, all right, we need this more than you do, and we are the ones who know how much it is hurting the country. Even now, we cannot even attract investment. There are blockchain funds all over the world, billions of dollars, but how many of it is coming into Nigeria? And we are talking about $1 trillion economy. How are we going to do this with an agricultural sector that is not performing, or with petroleum that the price is currently or constantly going down? How are we going to achieve it? Technology gives us the edge. The top 10 companies in the world today, 10 of them, 8 are technology. They are in the tech sector. So this is where the world has moved to, and we need to follow suit. The other gentleman who asked a question about blockchain policy. There was a blockchain policy which we are involved with during the Buhari administration. Now, the world has evolved. Currently, that policy has faced a pilot project stagnation. All right? In as much as there was a policy, we have not actually had any pilot project that we say is as a result of this policy. And now blockchain innovation has moved beyond what the policy was looking at, which is capacity development, adoption, and innovation. We have so much to talk about, and that is why it needs an update. It needs a proper implementation, because I don't know, another gentleman over there made a comment. Yeah, we come up with these things, fantastic, and then they just exist on paper with no actual implementation. And we don't understand it. We are from the private sector. We are from an ecosystem where everything is fast-paced. You know, we don't understand the bureaucracy of having to drag leg. If we are doing this thing, let us do it. Let us stop having policies that are sitting on paper without actual implementation. And we are ready as an ecosystem to support every work and every work that needs to go on into that. Thank you.
Okay. So, let me start with the passporting and what the regulator has done in that regard. Rules are very clear. In the rules, in the digital asset rules, there's actually provision, but the thing is, you need to be, for the foreign operators, they need to be registered in their jurisdiction. And you, as a Nigerian that is looking to go to other jurisdictions to operate, you need to be registered with the SEC. Now, looking at fintech, there's this Global Fintech Innovation Network. SEC is a full member. And what that does for the Nigerian fintech is that if you have innovation that is geared towards the global space, SEC, if you're registered with the SEC, SEC stands as your guarantor. For example, for crowdfunding models, those that are into crowdfunding, if you want to test your crowdfunding in the global sandbox, in the global fintech innovation space, if you're registered with the SEC as a crowdfunding intermediary, complying with full regulation, then the SEC will sponsor you to test your innovation in that global space. So that is already in place, as SEC is a full member of GFIN, that's Global Fintech Network. And then somebody asked about collaboration, Mr. Bright, on stable coins, way forward. What is stable coin? Depends, private money or digital assets issued to maintain a stable value. So for stable coins that are issued and pegged to the fiat currency, which is the Nigerian naira, and the use case, you know, I keep saying that SEC, we look at the activities, we look at the use case. So if the use case of the stablecoin issued and pegged to the fiat naira is to facilitate payment, is to facilitate cross-border settlement, that is the purview of the CBN. Now, if you issue that stable coin and you say you're going to list it, it's going to be on an exchange to be traded, it's going to be used as a loan, or it's going to be, in a yield farming. You're pulling money from people. That is a SEC business. So there's a close, and that is why SEC and CBN, right since last year, there's a virtual asset regulation committee that the SEC and the CBN work together to understand this space. And for the stable coin, we're already testing one in our regulatory incubation, and it has been doing very well. Right now, with that test in the regulatory incubation, we've been able to draw up guidelines on how it will be operated. SEC is responsible for issuance. The law makes it so. If you're issuing any token, any crypto in Nigeria, you need to send in your white paper for clearance before you issue it. So if you're issuing stablecoin in Nigeria, you need to send in the white paper for us to look at, and then clear it to know what is it that coin is going to do, and we'll place it in the right perspective. The management of the reserve is, for the stablecoin that is pegged to fiat, it has asset that backs it 100%, either cash or securities or equities. And who is going to manage? Who is going to ensure? Don't forget that it's a promise that you have given somebody your coin, and tomorrow when you come back to, I have the money, I have the value to redeem that coin. So it's a promise to pay. So the banks that are going to hold that reserve will be in the purview of the CBN. But for you to issue that coin, the SEC has to vet it and give you the no objection. And if you're going to list that coin, in fact, with the stable coin pegged to Naira, the Nigerians will have it because now you don't have to go sourcing for dollar to buy any crypto. If you have a stable coin pegged to Naira, you can access your crypto space directly. So that brings down the pressure on the Naira. So the SEC and the CBN are clear on that. And when we move on to what the regulator is doing to understand the space, SEC journey started since 2017. We started with the initial assessment. For some of you that have been with us, that you used to fill an initial assessment form before we started regulatory incubation. What is regulatory? It's an abridged sandbox. And what is sandbox? Sandbox is an environment that enables innovators to test their model, both under the supervision of the regulator. So both the innovator and the regulator get to understand this new thing that is coming into the space. Is it a business? Is it a new business model? Is it a new service? Is it a new product? We get to understand so that we can craft the right regulation for that activity or the product. So that is the approach the SEC has taken. If you're bringing innovation to our space, it has to go into incubation. And what does it do to the young ones, to the innovator? It helps you to even understand the regulation. Our regulatory incubation is for a period of 1 year for those that want to test innovation. So during that period of 1 year, you get to understand the regulation, if there is one, or if you are going to craft one with you. And then you also get to build track record as a startup. So we get to understand each other, get to understand the model, get to craft the right regulations. And for the virtual asset service providers who are already operating in this space, we made a provision for you to say, okay, you're already there, you have huge number of investors in that space. Come, let's reason together. Come and register. We will give you, accelerated regulatory incubation where we want to understand what you're doing and the risk that your platform or whatever you're doing will bring to this space. Now, if you say you're a trading platform, there are so many models of trading. Are you doing the P2P trading? Are you doing OTC trading? So what the accelerator regulatory incubation does for those that are already established is to understand your model so that we know where to place you. Are you intermediary? Are you providing advisory services? So the SEC is clear on its mandate. The SEC is clear, its focus. Since 2017, we've been on this track, and we know where we're going. Now,
thank you.
You said that.
Thank you.
Just a minute. Let me just wrap up.
I see the passion.
At least we are clear that we know where we are going, and we are moving with the youth and the. Thank you.
Yeah, I see the passion. Thank you very much. Thank you. I need the panel to still be seated. While you were on the last panelists came, but we are just going to give you 1 minute to speak. So please come. Round of applause for him. He got stuck in Lagos traffic. You're welcome. 1 minute, please. I'm timing you.
Good afternoon, everybody. So sorry for coming late. Permit me to stand on the existing protocols. Very quickly, just to summarize everything the panelist members here have been saying, especially the president of CBAN, which I'm also a member of. The most important thing here, all we're trying to say is collaboration to make sure that every regulatory body that is in charge of helping these innovations to grow, especially here in Nigeria, we work together with CBN, with SEC, everybody, everyone comes together to work together as one. So we have a framework that is very flexible for innovation to thrive in Nigeria. Like he said, many innovations, many of my kind of people go out of the country to get, licenses because they are more flexible. They allow investments. You can be able to get investment from, having a European license. An American license is quite more flexible to do that. But here in our own parts of the world, the framework is kind of very strong and it doesn't really encourage innovation. So all we're trying to say here is let's collaborate together with the CBN, have a very flexible framework that allows us to work and grow together. Thank you.
Thank you very much. At this point, we'd like to call on the Executive Commissioner to come for a group photograph with the panelists and the MD NCMI as well. Please, come up, please. Then I think someone has brought some questions, 3 questions. We would advise that you speak to Janet by the side as soon as she leaves the panel. Thank you. All the paparazzis, please.
Thank you very much. A round of applause for our moderator and panelists as they exit the stage. So quickly, we're going to the next panel. And this panel will be speaking on proactive compliance strategies, moving beyond responsive measures. Our panelists for this session are Dr. Abdulrazak Mohammed from the SEC. Dr. Abdulrazak heads the Inspectorate Division. A round of applause as he joins us on stage, please. We also have Mr. Moses Azege, and he's from the NFIU. A round of applause as he joins us, please. Joining us from Ashon, we have Mr. Charles Egbuno. A round of applause, please. From the Chartered Institute of Stockbrokers, we have Dr. Mohammed Aliyu Momo, FCS. A round of applause, please. Joining us from CC COSIN, we have the General Secretary, Mr. Olaliko Olorunkunle. A round of applause, please. Representing the Fund Managers Association of Nigeria, FMAN, we have Mr. Austin Arenta. A round of applause as he joins us on stage, please. To moderate this session is none other than the MD of the NCMI, Dr. Tunde Kamali. A round of applause, please.
Thank you. Dr. Kamali, please, you come up stage. I know there's something a bit different you see now. Kamali is just going to be a preacher today. So, sir, we'll just give you 40 minutes, sir.
Okay.
Thank you.
All right. Since we are talking about compliance, we'll try to comply. Thank you. And I'm sure we'd all be wondering why there's no chair for the moderator to sit. This, to me, seems like the most powerful of all the panels we have had since yesterday. And why do I say this? Without compliance, regulation is a joke. Yes or no? Please give this group a big round of applause. Whether you and I like it or not, business the world over has gone jet speed. And what does this mean? It means it has become ultra imperative for us to ensure that we balance the opportunities presented by innovation with efficient and indeed proactive compliance so that we can ensure organizational and collective successes. Innovation between you and I, which is not controvertible, drives growth. It drives competitiveness and customer satisfaction, while on the flip side, compliance ensures regulatory fidelity, effective risk management, and the protection of reputation. Like we just all agreed, without compliance, regulation is a joke. And what does that mean? It means that compliance is a critical aspect of a responsible market, and it implies adherence to all rules, regulations, and standards. However, traditional compliance approaches often focus on yesterday, what had happened yesterday, instead of looking forward. But what is proactive compliance? This is a situation where issues are addressed before the regulators point them out. While reactive compliance is a situation where we wait until either the auditors or the regulators or our clients point out our errors. But compliance today, like I said, is looking ahead, deciding where it should go, and steering towards better options. It is a strategy where organizations anticipate risks and address regulatory requirements before they become problems, rather than waiting for issues to arise or for regulators to point them out and impose penalties or other deterrent measures. It embeds compliance into strategy, not just operations. It encourages ownership and response in real time to regulatory, social, and reputational risks. Proactive compliance is built on culture, communication, and continuous improvement. My Executive Commissioner, Legal and Enforcement at the SEC, distinguished colleagues, I say good afternoon. I guess I deserve a response. Because we are here today, you must comply. Because we're talking about compliance. Now, within we were looking at a whole 1 hour, But my regulators, regulators always also have regulators. They have said we have only 40 minutes. We'll try to add about 5 more minutes and then pay whatever penalty that comes with it. So, in the next 1 hour, distinguished ladies and gentlemen, we'll be digging deep into the concept of proactive compliance with a practical assessment of where we stand today as a market. Why are we here? And how can we better the state of things for a more forward-looking, active, and globally competitive market? Once again, good morning. Yes, we have on the team regulators, operators, frontline regulators, we have statutory regulators, and we'll be coming together as one to look at the issues and also try, at the end of the day, to provide solutions on how to make our market a more competitive market at the end of the day. So, the shots are ready to come. And my first shot goes to the regulator in the midst of us, that's Dr. Abdulrazak. How would you define proactive compliance? And what would you say is the state of compliance in Nigeria? Are we proactive? Are we reactive? Thank you.
Thank you, Dr. Today. My response to that will be that proactive compliance is more of forward-looking approach to compliance. It is rather a framework for identifying, anticipating, and mitigating compliance risk before they crystallize. And what are these that will crystallize? Usually, we look at financial losses, but however, we also have regulatory sanctions that may come with it. There are issues around reputational damages, and these are more critical than even the financial losses. And in terms of orientation, proactive compliance, or let's say risk-based compliance, is supposed to be a strategic focus rather than just compliance. What we see generally as regulators is that the focus to compliance is more at the level of the employee rather than from the top. Since yesterday, I noticed we've been discussing the tone from the top. So what compliance should be, if it has to be proactive, it must have that strategic orientation, and it should be risk sensitive in nature. The most critical part of proactive compliance is the use of technology. You can agree with me that if you have to be proactive without technology, that will be a tall order. You will not be able to achieve much without technology. So technology is in the middle of proactive compliance. What are the elements that we could see in proactive compliance? Some of the things I noted here are early detection. How are you able to set up a framework for early detection of compliance issues? We have, how are you able to set risk indicators? most importantly, what we should have is a system that have identified the scope of the risk that we carry. And those indicators, do we have enough data to do analytic? Can we do transaction monitoring effectively? How vigilant are we with having red flags that will trigger such compliance issues? So these are the early detection framework. So we also have the framework of continuous monitoring. How are we able to set up a supervisory, an active supervisory structure that best identify the way we monitor these compliance issues?
Dr. Abdulrazak, thank you very much. We'll get to the nitty-gritty of we'll get to the nitty-gritty.
So let me answer the second question.
So please answer the second.
So the second question is, where are we with?
Are we proactive?
Yes.
In compliance?
Where are we?
Or reactive? Just one answer.
One answer.
Yes.
Wow.
Are we proactive? Are we proactive or reactive?
We are largely reactive.
Thank you very much. Thank you. Thank you. Thank you. Thank you. Like I told you, this is a compliance discussion, and we must all be ready to comply. However, before I move on, I'd wanted to crave our indulgence to allow us stand on existing protocols. But while my colleagues are seated, I'm the only one standing. So I would ask that you allow me stand and allow my colleagues to sit on existing protocols. Thank you very much. So from there, Dr. Momo, please, I'd like you to add a few comments to what Dr. Abdulrazak has just conveyed to us.
Thank you very much. My executive commissioner, I always respect protocol. Thank you. And my market operators. Compliance is not really a very clear-cut thing about being reactive or proactive. In the process, the most important thing is what do you want to achieve as an institution, and which institution are you working in? Because compliance to SEC is different from compliance to an SRO. It's different from compliance to a market operator. So the truth is, where do you draw the line? And I know you want me to share my experience.
Yeah, please, quickly. Half a minute.
From half a minute.
Yes.
From my experience, I was fortunate to have worked at the Nigerian Stock Exchange then, and as the head of regulation then. I don't want to bore you. Post 2008 was a very challenging. I just want to explain when you talk about proactive and reactive. Post 2008 was quite challenging for the whole market. Integrity was going. And I remember very, very well, I was unfortunate to have now been made the head of regulation. Then EFCC was picking up CEOs of stockbroking firms like they were picking cherries from the ground. Market credibility was at its lowest. I remember then Sambo, the head of monitoring that year, Sambo called me and said, look, we can't continue like this. SEC has a very, very robust risk tracking framework like we used to have at the stock exchange. That I'm going to suspend everybody. I said, Sambo, you want to kill people. Then there was a handshake between SEC and the stock exchange. We collaborated on a lot of issues. So at the end of the day, we realized that, no, you can't do this. But I ended up blackmailing him that, look, for these people, you are a secondary regulator, not a primary. The primary regulators is the Nigerian Stock Exchange. So let us deal with it at the end of the day. What happened? Most of the stockbroking firms were not capitalized. Secondly, monies were just flying up and down. You couldn't really track investment of the investors in which they were acting as custodian. And, for us at the exchange then, it was a very big problem in terms of integrity. Both local and international investors were just wanted to leave. And we had to do something. Let me just give you a typical example of the kind of problem we had. When I was talking to you, we had over 350 stockbroking firms. About 248 or so were active. Now do this math. What is the income of a firm? It is from commission, is it not?
Yeah.
Now do this very simple math. The allowable commission was 1.75 then. Then look at the value of stock traded in the market. So what it means is the monies that all the broking firms could make is dependent on the value of the stock that was traded on the market. When you now take 1.75. Simple math. By the time you divide that by the number of the active, not registered stockbroking firm, the figures you were getting was not enough to pay the clerk in the office. So you now had, I think by the time we did it was about 1.8 million naira. So what it means is an average firm will have been earning 1.8 million naira as income. Who does that? So we needed to do something. So at the end of the day, we started working with SEC. In fact, it's exciting that I'm attending this compliance summit. I hear it's the second one. That was actually what gave birth to the compliance function in all the stockbroking firms. So what we did was we met with EFCC, very cooperative then. We said, look, we can't be arresting our people because we needed to protect the profession, stockbroking. The moment you destroy it, because the impression the security agencies had was it was the stockbrokers and the CEOs that were stealing monies. He said, no, this is not how it works. The broker is on the floor. He just gets his jobbing book and just execute trades. So we now said, okay, how do we do it? With my team then, we now, we requested that each of the, at the end of the day, we suspended close about 59 years. Then we requested for each firm to send a representative for a meeting.
Sorry, you have half a second
Yes.
to go.
You know, I'm just telling you, that is reactive. We are being reactive. We are being reactive now. It was at that meeting that we started talking and what gave birth to compliance function that you have. Then proactively, you know, the exchange had done a lot of strategy in terms of moving forward. Then we realized that most of those stockbroking firms moving forward will not compete globally. So we instituted a lot of things, but unfortunately, and one of the hallmark of what we wanted to do was have shared service. Because if you look at the various firms, now no matter what they make, it's expensive, very expensive, maintaining a compliance function. Because everybody is paying. So you need to have an integrative shared service system. Maybe later on we'll discuss some of this.
All right, thank you very much. Still within the regulatory perimeter, Mr. Mo Azege of the NFIU, would you say that compliance in Nigeria, especially in the capital market, as we speak today, is proactive?
Thank you. Going by the background that you provided, I would like to say that within the perspective of AML CFT, if Nigeria goes back to the gray list, then we know that compliance is reactive, impliedly also for the capital market sector. We just came out of the gray list. There were a lot of engagement and a lot of remedies have been put in place. If operators do not comply and adopt compliance as a culture, if we comply just to meet the letters of the law, chances are that we will go back to the gray list. And if we do, then indeed, as a country, it's reactive. But let me go to the entity level. At the entity level, for the various operators, if you get sanctioned for non-compliance, impliedly, you are reactive. If you avoid sanction, not just avoiding sanction, if the outcome of your compliance function is effective, and how do we measure effectiveness? How you measure effectiveness for AML CFT is by the quality and quantity of compliance reporting that you give out. Let me stop here for now, sir.
Oh, thank you very much. And from Mr. Azege, I'll move on to Mr. Kunle, Olorun Kunle, right, of CC COSE. Now, my question is simple. Are you compliance officers guilty as charged? I put it to you. Yes.
Well, maybe that would have been very easy for someone else to answer. but from where we sit as CC COSE, being the Committee of Chief Compliance Officer of Capital Market Operators in Nigeria, our mandate is to ensure that all of our colleagues, not just the Chief Compliance Officers alone, but including every registered, even beyond the registered compliance officers, we have even extended our coverage to intending compliance officers to make sure that they are thoroughly groomed in terms of their functions, what is expected of them as a compliance officer. So just not to belabor us and time management, I would say that we are not guilty, okay? That's not to say that we are saying that we are 100% proactive, because if we were 100% proactive, we shouldn't have found our way into the gray list in the first place, okay? Now, we are aware that, of course, part of the operators, because currently, as you say, I'm sure we have, if not more than 1,000 operators in the capital market now, and with the current strength, or let me say the capacity that SEC has now in terms of manpower, strategy, and all, I don't think SEC will say that they are actually covering all of the operators at the same time. And if there is no full coverage, let's say on a yearly basis, and we have some of our operators who are not taking necessary steps in terms of making compliance value-adding and not just waiting to be told what to do or waiting for penalty before they do what they have to do. At that point, we'll say that maybe some parts of the compliance, well, not the compliance officer, part of the operators are reactive. But I would say we are proactive largely, and we know that we are on a journey of ensuring that we get to the top quality compliance function that is expected of us. Thank you.
Thank you very much. But I hope you remember there's the regulator at this end of the panel. So be careful what you say. Now,
It's noted.
Now, Mr. Agenta, this is to you. And the question would be, from what the regulator has said, we are majorly reactive. What would you think or say are the likely factors that has kept us where we are? Would you say it is regulatory inertia or lethargy or capacity building or lack of technology or just pure rascality?
Okay, thank you. So first, I would say we are leaning reactive. I'm not as enthusiastic as Lekon. I think we are leaning. We are not fully reactive. We are leaning. The fact that we are off the grey list shows that there is progress. But what do we need to do, like the question you've asked? So I think compliance has a lot to learn from risk management, because compliance is actually a risk management function. A lot of people treat compliance more like control, where the compliance officer has a desk under the staircase, and his job is to file STRO and CTRO on a weekly basis. That's all they see compliance officers as. Risk management went through this maybe 1-2 decades ago and fought its way into the boardroom. I'm a risk management practitioner, but I'm a compliance practitioner as well. So risk management has elevated itself into that strategic role where people are now seeing risk management as opportunity rather than problem. And there was something I learned from here today where they said good compliance is good business. People today say good risk management is good business. And so people need to get to the point where we can say good compliance is good business. And it comes from similar building block, really. Your strategies, your processes, your infrastructure. We talked about software, for example, automation. That is the infrastructure. The governance, the board has to set the tone, management has to set the tone, and then culture. Culture is the hardest one to maintain. So we're all on our toes this past few years because we wanted to get off the grey list. Now the problem is people may backtrack. People may go back to sleep. So culture is the hardest thing to maintain. So the other things you can put in place. So how do you get the culture to that level and keep it there? So that is the training you're talking about. All the other things, having the processes, ensuring that those people at the board level are taking compliance into consideration. So, for example, most companies right now are setting their strategies for next year. Is the compliance officer in that room? Is anybody talking about compliance officer? The risk management officer is there right now, but I hope he's talking about compliance. And we need to get the compliance officer, the compliance function to the level where it's there in the boardroom. And they are setting budgets for the software for automation. They're setting budgets for compliance officers training and so on and so forth. So I think that is what we need to do. Thank you.
Thank you very much. And more importantly, thank you for reporting your employers that they put compliance officers under the staircase. And that's why you never find him in the room. Now we'll go on to you, Mr. Egbunowo. Yes, let's look at the brighter side of things. What mileages, what advantages do individual entities, regulated entities, start to gain if they are proactive? And then what do we all as a market also stand to gain if our market is proactive?
Thank you so much, Mr. Kamali. I think I should first of all say that I'm here to represent my chairman of ASEAN, Mr. Sainde Adenegbe, who has traveled to Kigali for the Asian conference as they were.
You just exposed them.
So, just to make that clarification, thank you. To address your question sorry, can you rephrase it again?
Okay, I said okay, let me put it in a different way. What are the advantages of proactive compliance, both to the entities, to the regulated entities, as well to the collective as a market, as a nation?
Okay, thank you. I think the most important thing is a lot of my colleagues have said a lot here. Proactive compliance, what does it do? What are the advantages? The advantages are numerous and key. When an organization imbibes the culture of being proactive in terms of its compliance, the most important advantage of it is the fact that reputational risk is completely or extremely minimized. And reputational damages to any institution, we're all aware, such organizations do not survive this test of time, as it were. This is aside the financial risks of paying penalties whenever there arises or receiving sanction or the other. The imbibing proactive compliance as a culture in an organization has numerous advantages, also in terms of the way your clients, sees and views the organization as it were, because a proactive organization helps to build that confidence with clients because they're seen as an ethical organization, an organization with standard, as it were. So I think that's the key advantage, really. Aside the financial bit of it, the reputation is key, just as we say in our association to most of our colleagues, that what we really sell in this market is not the financial instrument, really, but your integrity. Once an organization can maintain a high standard of integrity, ethical standard in its operation, you can be sure that that organization will stand the test of time. And that is one of the core ideologies of being proactive in terms of, your compliance standards. Thank you. I hope that addresses it.
Thank you very much. So if I heard you right, what you've just said was what we heard this morning that has been re-echoed earlier here today, that proactive compliance is good business for the entity. And for the nation, it is good global image. And ultimately, strong competitiveness. I hope we're speaking together. Okay, good.
Perfect.
So now we're moving on to experience sharing. I know it's only ancestors who share experiences because they have the stories on the palm of their hands. And if you look at the set of men on this panel, I'm sure you know who the ancestor is. Do you know? He's the only one dressed like a father. So now, Dr. Momo, I'll come back to you. Please, can you share an instance with us where proactive compliance or proactivity generally had helped you in your organizational operations and saved the day?
Well, I don't know who the ancestor is, by the way. If I'm an ancestor, then Kamali is a deity. Yes. Basically, proactive compliance is driven by risk management, like he pointed out. Like most organizations, especially in this market, the moment your risk management is not robust enough, and your risk management is driven by your strategy. If you don't have a strategy, you can't have a risk management. And if you don't have a risk management, you cannot have a compliance. What are you complying to? I'll still tell you that over the years, one of the things that have made us who we are today, okay, look at this is a typical example of proactive compliance. You now have the function has been completely institutionalized in the market. And I'm still very close to the market. I can tell you that the kind of job these people you have here seated, the kind of things they've done, the kind of embarrassment they've saved the nation from is not something you can quantify. So you don't need to go very, very far. This is an example of proactive risk management, the proactive compliance. And they are doing a very, very good job. Because I don't know whether there's any firm now within the financial ecosystem that does not have a compliance officer. But we now need to go beyond that because that is one very huge success we've recorded. Like my MD there said, how do you now increase capacity of these compliance officers to be able to be more proactive in what they are doing? Because what he seems to do now is like most of the compliance officers are just like SOP driven. This is what we do it. No, we should go beyond that. Now look at your organization. Where is your organization going in the next 5 years? What are the likely risks that we tend to run? And I'll see, going back to my former life, we knew that we were going to have problems. You said I should share experience. Then, okay, let me give you a typical example. Like I was saying before, we knew that we wanted our firms to be world standards. And one of the things people require at that level is your financial statement. And you don't want to see the kind of financial statement we used to see in those days. No, you don't want to see. And that was a period where very crazy about IFRS. And one of the things, I think I've discussed it with you, if the regulators does not support the firms cannot go anywhere. So because as at that time when they are adopting IFRS, the cost of adoption was crazy. I mean, to train alone, you are looking at between 250 and 500,000 naira. So the management of the exchange had to step in. The first thing we did was get the way we had the compliance people. We now had a meeting of all the CFOs and supported them to create a standard template for a chart of account for their industry. And we had other plans. And I think that one made a huge difference. Because what we eventually did was we had a trainer, ACCA trainer, that we needed, that had to give us a discount. From about 250 to 500 to less than 50,000 naira. And most of the CFOs were trained. And you can imagine what the impact was on the market. So if you are thinking of proactivity, the regulators themselves, you should appreciate the fact that most of this, most of the cost will be borne, and you have to help to support the firms because it is very, very expensive. And again, you encourage shared service. Because if you don't have a shared service, everybody will just be working in silos and accumulating costs they cannot. And that is what one of the major problems is. The moment the cost of operations is too high, you cannot take care of the staff themselves. People will start looking for easy way to make money. But if you can support them, and as they are here now, the take back is, how do we have shared service? Like the representative of Ashon said, I think that's one of the things you guys should equally think about. Most of the things you are doing in terms of software, in terms of IT, we are talking of the cloud now, so you can have shared service managed and equally regulated by the SEC and the various trading platforms. Thank you.
Thank you very much. When you start to hear in those days, in those days.
My executive commissioner, please save me from this man.
All right, now talking about shared services, softwares, and support for market entities, I'd like Mr. Azege to take this on. What would you say will be the role of technology in ensuring that we are always able to achieve early detection and continuous monitoring? The role of technology in all of this. Thank you.
Thank you, moderator. I really was hoping the question goes to SEC. One aspect of shared service, and let me digress from the issue of technology, is knowledge, human capacity. And I'm glad that we have Mr. Bolega called them COCOSIN. I remember my colleague in the office used to say CC Kobe. Which one is correct? CC COSIN. it's a very, very good platform for not just capacity building, but engaging on the contemporary issues that is peculiar to the space. Also, proactively engaging with the regulators. And I will give you an example. Looking at the STRs coming from this space, there is a trend whereby most of the operators raise concern around third parties. Money is coming from third parties into the space. Makes you ask yourself, do they actually discuss with each other on the platform as to what is going on in our space? And what do we have to learn from each other? So, taking away, because I'm not a technology person, taking away from the technology aspect of it, I want that we should take more advantage of such shared platform of engagement. That way, the bridge between the regulator or the coordinator, someone like the NFIU, and the operators will be bridged. And that is very critical to create effectiveness in the capital market space. I oversee the capital market space and what the CBN calls OFIs. And I tell you that this space is peculiar. I also oversee insurance. Insurance is pretty straightforward. But you have all categories of operators in the capital market. They are exposed, their functions are different, their exposures are different. So knowledge sharing between yourselves, who are the operators, and ourselves will enable us to formulate, kind of policies or rules that are peculiar, like I said, between the insurance, the banking, and the capital market. The capital market is more varied in terms of operators. So there is need for that continuous engagement so that we design policies and framework that is convenient for you. One of the arguments that people have as a mindset is that compliance is expensive to some extent, but the true cost of compliance, it's in the non-compliance, right? And so the role of the public sector is to work with you in ways that will ease, making compliance more convenient for you. So I will indulge that there should be more engagement between that shared platform and the public sector. And I think that the outcome will be better for the sector as a whole. Thank you.
Thank you very much. From what you just said, compliance is expensive, but technology could make it easier and better and more efficient for us. So, Mr. Sek, please take the shot. Technology.
If we look at
move it closer.
What we have in the past in terms of KYC, I think we can say we have made a lot of progress. We have applications now that can validate KYC. So technology is assisting in this regard. The volume of transaction that we have in the market is also enormous. Without technology, we cannot keep track of transaction monitoring. And if you look also at the shift that we have from T+3, we are now moving to T+2 transaction. That's progress in terms of technology. So if we have to be proactive in compliance, very, very impossible for us to be able to report, to be able to maintain clear surveillance without technology. So compliance, as they said, is expensive, but we just have to invest in technology to achieve this.
Thank you very much. Ladies and gentlemen, we're like 34 minutes into this discussion, which means by rule, we have just 6 more minutes to go. So quickly, we'll round up without wasting much more time. But this question is going to F-Man. Do you think that there's a risk that where the regulator pushes too much for proactive compliance, it may become over-regulation and may stifle innovation? What's your take?
Is there a risk? Yes, there's a risk. However, most risks can be mitigated. And it's by collaboration. I mean, we've been hearing collaboration all day. You know, the panel before us talked about collaboration. Dr. Momo talked about collaboration. And even our supervisors from NFIU has talked about collaboration. So that is what is required. So as far as we're all moving in the same direction, I believe the journey will be a smooth one. So we all have to agree that we are going from reactive to proactive. We need to get there by putting in place the strategies. Then we need to enable our processes through software. And if we can achieve some of the collaboration on software, for example, because right now a lot of houses are sourcing software to be able to automate our filing for anti-money laundering. It's expensive. Not only to purchase the software, but you also run a risk that you cannot implement that software properly.
Sorry, sir. We have like 4 more minutes to
Okay,
go.
yeah.
Please,
So basically my answer is it doesn't have to be something we are scared of. As far as we collaborate, the regulators, the trade groups, and all the others, we can achieve it.
Thank you very much. Just hand him the mic. Yes. And my question to you, sir, is how can regulators and the regulated entities come together and ensure that we improve the state of compliance in this market? Quickly, you have half a second.
Thank you so much. I think there's a whole lot of areas where regulators and the regulated entities, you know, can collaborate. And I'll give a number of instances. They've said about, I would rather say shared infrastructures, not shared services, really. You know, as has been alluded to, the operator themselves, you will realize that you have very, very small operators, you know, competing, a large number of small operators competing with few larger ones. And this small group of operators hardly have the financial muscle to address a lot of these infrastructural issues we are talking about. And the interesting thing is that digitalization provides huge opportunities, but it comes with its risks. Cybersecurity risks, risks of cross-border fraud, and a whole lot of other risks. So if we have a system, you know, IT-based, that is centralized, everybody can key into, where you could address issues of KYC, issues of identity verifications, and co. Interestingly, AI is also coming to play now, as it were, you know, to support the system. So these areas needs to be looked into between the regulated entities and the regulators to see how they can best extract the values from there. We also have areas of training, you know, capacity building in our market, which continues to be a major issue for discussion, you know. Both regulators and the regulated entities could also work together in this to address it, as it were. Then more importantly, issues relating to collaboration in areas of rule making, areas of new product development, because new product developments are usually driven by the regulated entities, as it were, but the regulators need to have adequate knowledge and seek clarity before such new products are launched, or approved, so to speak.
Thank you.
Areas of very important.
Thank you very much.
Just lastly, very important one. I think one very key area that comes up, in interacting with most of our members in our association, the SEC has done wonderfully well, but we also think there's also improvement to help in this area. Areas of timely approval of requests for market operators. Thank you, sir.
Thank you very much, and thank you very much for toasting the SEC. Thank you very much. Now, Mr. C.C. Koset, what are the barriers you see that we may face in everything he has pointed out? Quickly.
Well, what easily comes to mind, which is obvious, is the issue of cost that has been mentioned. We're talking about technology here, and because we want to achieve automation, we want to reduce manual process in our system, and we also want to minimize the rate of error, which leads to infraction and that leads to more, even expenses on the side of operators, paying penalties and all of that's related to it. So first, the first barrier here is high cost in terms of cost of those infrastructure, which what will help us is the sharing of infrastructure that was mentioned. Also, well, I'm happy that we still have our executive in this summit, is also to get the buy-in of our top executives, also connected to the board. Because if there is no buy-in, which also links to the cost anyway, to say that I think compliance is just a cost center, so why should I spend this much on compliance? So there has to be a buy-in from the top executive so that this can easily be communicated at the board, even while the compliance, the CCO is making a presentation at the board meeting. There's a backing by the MD and the EDs to say that this is also very critical for us to succeed in this business. So we can also extend it to maybe the pushback that we have, let's say from the staff members, where some people are resistant to change. However, I want to believe that that's actually part of our duty as compliance officer to see how we now bring in education, continuous training, and see how there is open mind to receive the new change that comes in. And I don't know if I will have a few minutes to just mention, I like what I heard from the NFI talking about.
A few minutes.
Apologies, a few seconds. That talking about how, as an association, we really need to take advantage of our coming together, sharing information amongst ourselves. We have actually been doing that. Of course, I take that on board for us to do more. By next month, we are also already planning a conference amongst ourselves to see how we take compliance level to the next level from after the post-gray list that we are now. So there's a planned training, and we are bringing our regulators on board to see what do we need to do ahead so that we'll not find our way back. I don't know, I would like just to mention that we also have a few expectations from our regulators. Maybe there are some things pending that we want them implemented, which is actually going to help to promote the proactiveness we are looking at. First is, I know that the first time we had consolidated rules in the market is in 2013. And we know that there have been plethora, huge, large, avalanche number of rules from 2013 till date. And what we are requesting for is that the SEC should help us with the consolidation of all these rules. Let us look at some of our colleagues that are just coming to the market. It takes some of us that have been around to even point them to go and check this here for you to know what the latest is, because we have had maybe on a particular provision, we have had 5 rounds of changes. So consolidation of these rules will also help us to easily take the right step. Also, we have talked about standardization of a number of things, maybe account opening, particularly, I don't know if this has been mentioned, particularly when it comes to the issue of utility bill. I don't know if this has come to the attention of the SEC. There are different applications in the market when it comes to level of compliance when it comes to. So I want to believe that all of this is going to help us.
Less than a second now. Let's close because we are running out of time.
All right. And I think lastly, also, to help the proactiveness and get the effectiveness in terms of results from the compliance engaging with the business is the upgrading, talking about empowerment for the compliance of this, particularly the CCOs, the compliance officers, where the compliance officer of an organization is a junior staff. Like my brother said here, how will he even find his way to the boardroom?
Time up.
Thank you.
Time up. Where your compliance officer is put under the staircase. Ladies and gentlemen, while I thank the members of this panel for sharing their thoughts, and also thank you for the patience, I'd like to say this team failed in compliance. And you want to ask me why? We overran the runway by 5 nautical miles, but we are sorry. So what we quickly close, I'd like to state or leave you with this. The companies that do not take a proactive approach to compliance may find that they're unable to sustain their level of compliance under the weight of ever-expanding regulations. And this may lead to increased risks, loss of trust from stakeholders, and even in some instances, complete loss of business. On the other hand, proactive entities will realize that they do not have any more to wait for customer complaints or regulatory findings to mount before making improvements. Compliance to them would also stop being a tax on productivity, as proactive compliance would have become for them an ethical choice about keeping the promises and embedding them into the organizational DNA. For what? For success. Thank you very much.
Thank you very much. You see, this is what happens when people already at the beginning plan not to comply. How many people remember that they said they were not going to comply and they'll be willing to pay the penalty? And this is not the essence of compliance, right? Okay, so because of time, you know Dr. Kamali, when a doctor speaks, he becomes a bit more, dots all the T's and the I's. That makes sense. But we just need, Kelechi, 2 questions because of time. Yeah, we need 2 questions, please. And straight to the point. Okay, 1 already, the lady in red. Who else? No, please. You can take your comment to the... who next, please? Anybody else? Okay, let's take the lady in red, please.
Thank you. Good afternoon.
Make it smart.
Mine is just to re-emphasize something that I think the man from FMAN said, which is the issue of timeliness. While we as market operators were giving timelines, you submit this within this time and do this within this time. Sometimes when we make requests to our regulators, not just SEC, but all the different regulators, we find that they take their time to respond to us. Within SEC, different desks, we have different experiences. So we'd like them to also have that kind of timeliness and deadlines. 48 hours to respond to this. Sometimes they send email, they don't even acknowledge it. You have to use a phone call to call them. So would really like them to, that same compliance, that they should do the same. Thank you.
Okay, good feedback, but one thing also, when deficiencies are sent, you guys never come back, and it takes a long time. So, but your feedback is noted, the executive commissioner is seated, and of course this management that we have today, believe you, if you have to speak to the truth, a lot has changed and it will remain changed. The feedback will be taken and you will see more changes. Thank you very much. We invite the Executive Commissioner to please join the panel for a photograph. No, the MD NCMI is already here. He has to join. Thank you. Paparazzis, please. If you have to jog, you need to jog. Let's come, shift out a bit. Yeah, forward. Let's come out a bit. Yeah. Okay. Okay, so we are going to be taking the last presentation for the day, and after that we'll break for lunch. After lunch, there will be a closed meeting with all the CEOs. So if your CEO is not around, I think it's the right time to begin to send message to him or her, because the SEC management would like to have a conversation with them after lunch. Very important. So Kelechi, please, can you call the next presenter? You guys are looking good. Thank you very much. I think you spent more. Yeah. See, this you pay. That's the way you pay.
Our last presentation for the day is on enhancing suspicious transaction monitoring through RedTech and data analytics. Our facilitator is Dr. Tunde Ibidakwa-Obe. He's the co-founder and CEO at Redfill. A round of applause, please, as he joins us.
Thank you. 30 minutes, please. Come, Kelechi.
Good afternoon. Good afternoon, distinguished colleagues, innovators, regulators, and compliance professionals. I'm not Dr. Ibidakwa-Obe, I'm Dr. Tomiwa Iriosho, but Dr. Tunde is my co-founder at Redfill. So, my name is Dr. Tomiwa Iriosho. I'm co-founder and CTO at Redfill, and it's an honor to be here today. My background spans AI, computational modeling, and Technology Policy from the University of Cambridge and Imperial College London. And over the last few years, I've had the extreme privilege of helping financial institutions across Africa deploy technology solutions to some of their most pressing compliance challenges. Today, we're talking about enhancing suspicious transactions using RegTech and data analytics. But I want to frame this conversation around the fact that today's conversation and today's topic is not about technology. It's about something deeper. It's about the integrity of our financial ecosystem. Right now, Nigeria stands at a critical juncture. We have the most vibrant fintech ecosystem in Africa, over 200 fintechs. Explosive growth in digital transactions, rising financial inclusion. A lot of previously unbanked people now have access to financial services. And there's increasing regulatory scrutiny from the likes of the CBN, SEC, all intensifying enforcement with the goal of keeping Nigeria off the FATF grey list for good. That said, suspicious transaction monitoring is the backbone of AML, CFT, or CPF effectiveness. But the simple truth is that a monitoring engine is only as strong as the compliance lifecycle that feeds it. From onboarding to behavioral profiling to transaction monitoring to suspicious transaction filing, and so on and so forth. And while technology matters, in order to succeed in our overarching goal of securing the financial system, we need 3 key ingredients. We need quality technology, we need quality people, and we need quality processes. So, by the end of this session, you have a clear understanding of how RegTech and emerging technologies such as machine learning and AI can address Nigeria's unique AML challenges. I'll provide practical insights on how these technologies are used in suspicious transaction monitoring, and would also have actionable insights and key governance issues to consider when implementing these technologies in your institutions. So, let's begin. The world of finance has changed. We now have instant payments, cross-border payments, agent networks, stable coins, all manner of very interesting use cases, which is leading, of course, to transaction volume growing exponentially. With this growth has come significant drawbacks, and the biggest among it is financial crime. Specifically, the nature of criminal typologies from this very well-known financial crime has evolved significantly from our usual Nigerian prince scam to a lot more sophisticated fraud rings that operate like fast growth startups. Social engineering, which of course involves using deception to get access to confidential information, collusive networks, and sophisticated mule accounts. With this problem in mind, traditional AML systems built on static rules, manual reviews, Excel-based checks simply cannot keep up. At the same time, regulatory expectations are rising. The regulator demands accuracy of reporting within a risk-based framework. They want quality reporting with limited manpower that exists within our compliance teams. They demand continuous profiling of our clients, despite the fact that we have to analyze a ton of data for each client. That is why RegTech and emerging technologies, such as artificial intelligence, have become essential. Not optional, essential. But let me emphasize something. AI does not replace compliance teams. AI strengthens compliance teams. And so, the compliance lifecycle is where it all begins. So I'll be anchoring the next few minutes of this talk to discuss the compliance lifecycle, which includes the initial onboarding, behavioral profiling, transaction monitoring, and of course, regulatory reporting. simple reality is that poor onboarding means poor transaction monitoring. No matter how advanced your AI model is, it cannot compensate for data that was never collected. If you don't know the result of your ID verification, the result of the address verification, for businesses, who are the beneficial owners? Does the business have a verified address? What's the PEP screening status, sanction screening, adverse media screening, customers' typical transaction behavior, their source of wealth, the nature of their business? If you don't know any of this, then your transaction monitoring system is running blind. And so data analytics and AI, it's not magic. It needs fuel. And good onboarding is that fuel. And monitoring, that's transaction monitoring, is the engine that runs on that fuel. But onboarding isn't about collecting documents and ticking boxes. It's the moment we know who the customer is, and more importantly, who they are not. This is where behavioral profiling comes in. Because a truly intelligent system first understands and captures things like the typical amount a customer spends, the typical channel they spend. Are they always using USSD or online banking? Their typical locations, are they in Lagos, Kaduna, or Port Harcourt? Their peak hours, do they spend money at night? Is their frequency of their activity, do they do 5 transactions a month or 2 transactions a month? Is there seasonality to it? Do they do only transactions during Christmas or during Salah? And who do they engage with? Who are their known counterparties and relationships? Are they always on a particular e-commerce website or not? Only when we understand what is normal can we reliably identify what is abnormal. Behavioral profiling is about understanding customers deeply enough that their irregular behavior stands out naturally. And when you combine high-quality onboarding with behavioral insights, you achieve 2 critical outcomes. First, you establish the baseline for each customer, and providing you with a clear definition of what is normal for each person. And secondly, you assign a meaningful risk rating grounded in reality that incorporates the outcomes of your ID verification, address verification, adverse screening, PEP screening, sanction screening, and other data points we have collected. That's the foundation of effective monitoring, the first block, the building block of any intelligent compliance program. And I'll use an example from RecFile. At RecFile, we offer this comprehensive onboarding to our clients, not because we want to stress them or because we want to make money, which we do, but because that's the minimum standard required for an effective AML program. And it's backed by both legislation, local to Nigeria, and also international guidelines from bodies like the GIABA, the Egmont Group, and the FATF, the Financial Action Task Force. And so, transaction monitoring is where it all comes together. Traditional AML systems have relied on rules alone. Rules are your first line of defense. These are your threshold rules, your geofencing. These are location-based rules, high-risk flags, velocity checks, transactions over, high-speed transactions in a very short period of time. An example of a rule is any transaction by an individual that exceeds 5 million naira. We all know this. It's your CTR, your currency transaction report. Or you may want to flag a customer that makes more than 5 transactions within 10 minutes. However, these static rules fail to consider what is normal for you and I. And so, you have systems that end up with a lot of false positives, which is basically noise. But here is the truth, and we all know this truth, that most emerging criminal activity sits within the rules. No matter how many scenarios we come up with, no matter how many of us come up with those scenarios, we cannot predict what the criminals are trying to do. So as a result, the global best practice has moved from transaction monitoring of using just rules alone to using things like machine learning, which is a subset of AI, and of course, using full-blown artificial intelligence. With AI, you see things like patterns that you didn't notice. graph networks that reveal hidden relationships between your customers, sequence modeling that uncovers suspicious behavior over time, and you have advanced anomaly detection that helps you detect what is unusual before it becomes criminal. When you have rules, you have AI, and you have good context, especially from onboarding, you change from reactive detection to proactive prevention. And that's also exactly what we do at RegFile. We have a hybrid transaction monitoring engine that is rule-based and AI-powered. The rules that we set up for the clients set up on the platform help them detect what is known and they want to stop. With AI, we're able to leverage the initial customer baseline data plus the evolving transaction behavior for each customer to help detect what we call out of character. We're able to flag these anomalies in real time and leverage AI to explain to the analyst and also give them our confidence in our explanation. This is where reporting comes in. Even perfect detection is wasted if reporting fails. You can have the best monitoring system in the world, but if your STRs are unclear, your narrations are weak, your indicator codes on GoAML that you submit to GoAML are incomplete or inaccurate, your supporting documents are inconsistent, or your reports are submitted late, then your monitoring system has accomplished nothing. Your detection is internal. Reporting is where compliance really steps onto the regulatory stage. This is where your institution is judged, not by your intentions, but by the clarity, the accuracy, and the timeliness, and the quality of your storytelling. And make no mistake, STRs, your suspicious transaction reports, they are simply stories. They are stories that must explain what happened, why it's unusual, what risk it poses, and how it aligns with the recognized indicator codes, and what your institution did about it. A weak narrative can turn a high-quality detection into a rejected or ignored report. A vague submission can undermine days of monitoring work or even investment in the most robust monitoring systems. And an incomplete or inconsistent filing can raise more questions than answers. And so, for the first time, AI, specifically generative AI, is reshaping the way reporting is done in ways like never before. Again, at RegFile, our platform leverages AI to draft clearer, cleaner, and more coherent STR narratives by translating raw logs and the analyst notes into structured, regulator-ready explanations. We leverage AI to suggest the right indicator codes. Of the 327 indicator codes on GoAML, we are able to suggest the most relevant indicator code that goes with the narration generated, the behavior, the typology, and in line with the regulatory definitions. We are able to eliminate delays by reducing the time an analyst spends formatting, rewriting, or even collating your reports. And of course, AI, it helps with one thing particularly. It helps to provide standardization across teams so that every STR you file or any report you generate, no matter who drafts it, follows the same high-quality format and regulatory logic. AI brings speed, precision, and structure. But more importantly, it brings consistency. And consistency is exactly what the regulators value the most. Because regulators don't want more reports, they want higher quality reports. They want reports that tell the full story, that show the risk clearly, reports that reflect a mature, competent, and well-governed compliance function. This is the future of compliance. And so far, we've spoken about how quality technology can improve transaction monitoring. However, we need to talk about quality people and quality processes. So let's talk about the people next. Compliance tools fail not because the tools are bad. Well, some of them are, but not all. But because the teams were never empowered to use them fully. At RegFile, we consistently observe situations where rules that were set on the platform were incorrectly configured, thresholds were misaligned with the risk appetite of the organization, and alerts were being misinterpreted. For this reason, we built a training module on the platform named Elevate. With Elevate, we seek to uplift compliance teams. It's almost like a learning management system. We seek to uplift compliance teams, train everyone in the organization on AML awareness, provide assessment and certification, simplify the explanation of typologies, red flags, and emerging threats, and promote standardization in ways that the compliance team is able to achieve consistency in terms of review of alerts. Again, because a monitoring engine is only as accurate as the people responding to the alerts. And Elevate makes sure that the human layer is never the weak link in the chain. Now let's talk about the last leg, which is internal processes and data flows. Even the best trained teams need clear processes and clean data to function effectively. Compliance absolutely breaks down when the flows are undocumented, responsibilities are unclear, or decisions rely on manual ad hoc steps. At RegFile, a core part of our support to our clients is helping them with the internal structure needed to help them succeed. And what that means is that we are putting compliance, not engineering, back in control. In many organizations that we encountered, the compliance team was underempowered. As a result, the engineering team often decided what data points are passed to the transaction monitoring engine, which flows are observed, or even what thresholds determine which transactions become or get halted. This created a fundamental problem. The primary gatekeepers, the compliance team, were not the ones defining the rules. The internal processes unintentionally sidelined the people responsible for risk management. To correct this, we designed structured onboarding packs and workbooks that guide compliance teams to define key transaction monitoring workflows, escalation and approval processes, data points that must be fed to the engine have been defined by the compliance team. Do they get passed to the engineering team for implementation? This shift ensures that people who understand risk are the ones shaping the rules. And so when processes are well documented, owned by the right teams, and embedded directly on the platform, compliance maintains true independence. Internal documentations become part of the system itself. Reviews and decisions are auditable and traceable. Engineering enables rather than defines compliance. And the organization, importantly, can demonstrate strong controls to the auditors or regulators. Now, we've discussed effective technology, quality people, and internal processes. Now let's talk about some of the governance issues and considerations in the use of emerging technologies such as machine learning and AI. Let me start with a topic that doesn't get nearly enough attention: data privacy and protection. Data protection and privacy. In AML systems, we hold some of the most sensitive data an organization can process. ID identity records, BVNs, biometrics, location histories, behavioral profiles, device data. The list goes on. And so we have a responsibility, a very big one. And the responsibility is not just ethical in Nigeria, it's clearly legal and stated under the Nigerian Data Protection Act. That's the NDPA. The NDPA sets out minimum baseline expectations of how institutions must collect, store, process, and transfer, and even destroy data. But beyond the law itself, the regulator has made it clear through the General Application and Implementation Directive, which came into force in September 19 this year. That's the GAID. And that clearly breaks down exactly what and how organizations are expected to operationalize the NDPA. What this means for AML systems is simple. We must ensure that sensitive data is protected through strong encryption, strict access control, and proper retention governance, exactly as the NDPA states. The GAID goes further. It requires organizations to demonstrate accountability, document their processes, prove compliance, appoint trained data protection officers, conduct data protection impact assessment, especially when you are processing high-risk data, and ensure that your third-party providers also follow the same standard. But beyond all of that, we must also maintain audit logs and ensure explainability. Because if a monitoring engine or AI model makes a decision, the NDPA and GAID expect us to be able to show why that decision was made, who accessed the data, and the safeguards that were put in place. In other words, data protection is no longer a nice to have. It's a regulated obligation, and it sits at the center of responsible AI and AML practices. We appreciated this at RegFile and recently became a licensed data protection compliance organization. This helps us to simplify our clients' data protection audits and training using our platform called Auditor, making data protection an ongoing compliance or evidencing of your compliance a self-service experience rather than a tedious consultant-driven experience. Next, let's talk about automated decision-making, because this is an area where technology can cross ethical and legal boundaries if we are not careful. And I want to be absolutely clear. AI must never terminate a customer, restrict an account, or block a transaction without human review. We get asked a lot by clients, why can't you build an AI agent that flags the transaction and resolves it automatically? And our response is simple. It's unethical and it's also illegal. Because technology can assist, it can prioritize, it can help you highlight, but it must never replace human judgment, especially when the stakes involve people's livelihoods. In fact, the NDPA states that individuals have a right to not be subjected to a decision solely based on automated processing, especially when it has legal, financial, or even other very significant impacts. Essentially, the NDPA states that there is clear, the NDPA recognizes that algorithms can be unique, can be opaque, imperfect, and often discriminatory. And it mandates in clear terms that high-impact decisions cannot be fully automated. Human oversight must be meaningful, not symbolic. Individuals must be able to challenge the automated decisions. In fact, you could be taken to court on that. And organizations must be able to explain the logic behind automated decisions. So when we say AI must never terminate a customer without human review, this is not just best practice, it's a legal requirement. The third and final topic I want to talk about is bias. And across the industry, we have issues where names like, across the industry, we have names like Mohammed, Abubakar, Sulaiman, names that are extremely common in northern Nigeria. They get disproportionately flagged. Why does this happen? The sanctions lists have overrepresentation. Many systems don't have good keyword matching. There is poor name disambiguation. And frankly, a lot of the global tools lack local context. The result is that entire communities experience unnecessary friction during onboarding or even transaction screening simply because of their name. Ethical AI systems must deliver both fairness and effectiveness. And that means building more contextual matching, better scoring logic, proper bias pipelines, localized screening databases, and an AI-driven name disambiguation that truly understands our environment. And so as we begin to wrap up, we've explored data protection, we've explored integrity, bias, automated decision making. It's also important to highlight something practical, a framework that you can use when evaluating any transaction monitoring solution. And I've spoken a lot about RegFile in this presentation. It's worth highlighting that there are so many other solutions out there, but I certainly won't be blowing their trumpet for them here. That said, here are some key questions that every compliance leader in this room should be asking your vendors before adopting any transaction monitoring tool. You should be talking about data protection. What kind of data is collected? How is the data stored? Where is it? What is the login, the audit login? Can your vendors also demonstrate their compliance with NDPA and GAID? You should be looking at automated decision making. Does the system ever block restrict accounts or even block transactions without human interference? If the answer is sometimes, then that's a red flag. Run away from that solution. You should be looking at explainability and auditability. These are critical. Can the system show exactly who accessed data? What triggered an alert? What are the audit logs available? Questions on bias and fairness. Has the tool been tested on demographics or geography? Is the tool localized in terms of screenings? What controls do you have in place for specific groups of people or even entire communities? Finally, and most importantly, you should be finding out if there's an operational fit to the tool. Can rules be customized without engineering support? Does the system accept both structured and unstructured data? What is the SLA uptimes and so on and so forth? And it would appear as though there are many moving parts in order to achieve a truly sophisticated transaction monitoring engine. That's true. And the reason why is because you are not just buying technology, you should look at it as a holistic process within the organization built on 3 pillars: technology, people, and processes. Technology gives us scale. People give us judgment. And processes bring structure and accountability. Because without people, technology runs blind. Without processes, even the best intentions fall into chaos. But when all these 3 things, technology, people, and processes are all aligned, when your people are trained, when your processes are well documented, and when your technology respects the principles of ethics and data protection. This is when compliance becomes more than a checkbox. It becomes a strategic advantage, a shield for your organization, and a contribution to the integrity of the entire financial system. And that's the future we must build together. Thank you for your attention.
Please sit. Sit. Thank you very much. That was very insightful. And Kelechi, how many questions do we need on this?
I think we're hungry. We want to have lunch. So let's make it as quick as possible. If we have just 2 questions, maybe one from the front, one from the back.
Okay, let's start from the back. Anybody from the back? Any question from the back? None. Front. Okay, we have one. Okay, we have 2 at the back. We'll take one. So let's start from the back, please. Please, can you be smart about that? To the back. See the hands up.
Okay, thank you very much. Good afternoon, ladies and gentlemen. I just wanted to ask the last speaker if RegFile, don't know if I pronounced their name properly, if they have a central database for customers' KYC information. Thank you.
Good afternoon. I want to talk about pricing because in as much as CMOs want to adopt technology generally for customer onboarding, for transaction monitoring, we still need to make a business case for it to the management, right? And most of the tools that are available are pegged against dollar, right? And CMOs don't have deep pockets like the banks. So how do service providers like RegFile manage pricing such that if I am a CMO that got licensed 2 years ago and my AUM or profit is not a lot, but I want to automate, how do you consider CMOs like us? And the second question is, for CMOs that don't have core application, maybe due to their business model, for example, maybe the trust business, many don't have core applications around transaction monitoring. How do solution providers like RegFile handle that?
Thank you. Then the last question here. Please, in front here. Okay, you're not asking any question. Okay, somebody else have addressed it. Okay, so.
All right. Thank you for the questions. I got 3 questions. First one is around the central database for customer KYC information. Second question is on business case and the cost of transaction monitoring solutions. And the third one is around CMOs, capital market operators without core internal applications. Regarding the first question, I think it's more, if I'll ask the question in a different way, it's more around your PEP screening, sanction screening, adverse screening, and so on. Because the other bit of KYC, your ID, your BVN or NIN checks, A lot of that is already driven by access to NIBS or NIMSI. With respect to the other screenings like PEP, sanctions, and adverse media, as we very well know, if we take PEP as an example, PEP screening, we know that there is no consolidated PEP list in Nigeria. And so we at RegFile decided to turn the problem on its head using AI. And we essentially built proprietary algorithms that are able to essentially look through where people, where PEPs are typically listed. And what we've essentially done is that every second, as we are speaking, as I've been on this podium, names are getting added to our, essentially our database. We call it a dynamic self-populating database, such that even if somebody becomes a PEP in the last week, very high chances that we would have that person on our database. And similarly applies for sanction screening. We do cover over 1,500 lists across the world, and we have direct plug-in to each of those lists. In Nigeria specifically, we cover 9 lists, from things like the Nigerian sanctions list, to the EFCC list, to the Nigerian Correctional Centers list, or even the SEC DBAD list, and other, and so on and so forth. So essentially, we've been able to use technology to solve a lot of the teething problems that we have and try to make it affordable, which links to the second question, affordability. Currently, we serve over 100 financial institutions in Nigeria, from as small as a small microfinance bank in Ilesha or in Okuku, to the big fintechs that are processing millions of transactions on a daily basis. For us, we recognize the importance of being able to be accessible, and we've essentially been, first, we price in Naira, and second, the fact that we're able to leverage AI means that we're able to democratize access to very sophisticated systems. And I think some of the people in the crowd already use our system. We are so glad that Roku and Busha, the 2 sponsors of today, are already RegFile customers, and they have been using and experiencing and enjoying a lot of the automation that comes with RegFile. But that said, linking to the third question, for organizations that are small, as I said, we have small institutions in some obscure location. We appreciate that not everybody is API driven or technology driven. Everything I've spoken about, whether it's your onboarding or your transaction monitoring, or even your regulatory reporting, whether it's your suspicious transaction reporting or even your license-based reporting, all of it can be done without APIs.
Thank you. Thank you. I guess you're done with all the questions, right? You're done with all the questions.
I was just going to wrap up that. Yeah,
1 second, please.
It's okay.
All right. Okay, I guess at this point, thank you very much. Executive Commissioner, I think this young man wants to. MDA, NCMI, please can you also come up to have a picture with this? Then Kelechi, we are here to have a picture with the Executive Commissioner.
Yes, I it's our turn too.
Yeah, it's
so
our
after
turn.
Them, we can also take pictures.
Yes, after that we'll take
have
picture.
them as memoirs.
Yes. So we want to have a picture with you. Yes. The paparazzis, please. So, Commissioner Ma, we are coming for our own picture. Please, let's join her.
If the compliance level in this market is low, all the work we're doing as regulators will be meaningless. And even for you, business would not be as good. So for everyone that took time out to be here, I hope we have all learned something. And it's a continuing process. This is just the beginning. Hopefully we would all institutionalize learning even in our own different institutions. So after now, we'll be breaking for lunch. For all compliance officers, it will be thank you and see you again, hopefully next year. But for the CEOs in this room, after lunch, please, we have a closed door session. If compliance is important to you, I'm sure it's important that you attend. So please, after lunch, the CEOs will come back and we'll have that closed door session. I wish everybody here an enjoyable lunch and a safe. We are not even done and people are standing up. Please, can we just wait a little? That's not, wow. No, still no. Anyway, thank you and I wish you all safe journeys back to your respective offices. Thank you for coming.
Thank you, Executive Commissioner. Just to also note, the communique will be sent to you, and yeah, we'll send it through the SROs to you. Thank you. Thank you for attending the 2025 Compliance Summit.